So in this session, we are going to learn 9 subsection 3 and 9 subsection 4. What is this reverse charge cases? We are going to club it with exemption. We're going to club some discussion with ITC. That's our objective. The detailed discussion. So you have to be very careful. See what happens generally with charge chapter and then related area is that you tend to forget it faster compared to all other areas. Charge is something that people forget. So I want you to ensure that you concentrate, you remember it till the exam. All right, okay. So let me take you through the way of discussion and then start. You can see it on the screen that there are two sections which talks about reverse charge. The objective of reverse charge is very clear. I used to make this statement in our regular classes. We used to call it as like ease of collection of taxes. The entire section 9 is drafted so that the government gets the taxes faster. The government is keep looking at option. How can I get the GST faster? They said normally GST, how can I get the GST easier? Okay. Normally GST is collected from supplier because it is easy to get it from the supplier. One supplier will make supply to thousands and 10,000s of customers. From all of them they will collect, and then government needs to only catch the supplier, which is easy method of collecting taxes. But GST department knows that it might not be always easy to get taxes from the supplier. Sometimes it will be little more easy to get it from the recipient. Those are the cases which will be notified under reverse charge mechanism. This is your fundamental understanding. What is RCM? Cases where it is easy to get taxes from recipient, government notify and ask the recipient to pay taxes instead of supplier paying taxes. Are you guys understanding this? Okay. There are two sections under 9 which talks about reverse charge. So both of this section looks the same. So it's very normal that people get slightly confused. Okay, why 9.3, why 9.4? I could have just had one section. It's because of multiple amendments. They had actually two sections wherein they notify RCM cases. Now, what is this sections all about? 9.3 and 9.4, both of these sections are giving power. Power is given to whom? Power is given by Parliament to government. What is that the government can do with this power? Government can actually notify. They can analyze an industry and notify and ask. Instead of supplier, they can say, hey, in this cases, recipient, you pay taxes. Now let's try to understand the difference between 9.3 and 9.4. In 9 subsection 3, I have given a name called specified cases of RCM. There are 20 odd cases which are given in notification 13/2017 where recipient will pay taxes. 20 cases where recipient is paying taxes in services instead of supplier. And in 9.3 cases, the most important point would be this. The supplier could be registered or unregistered. Sometimes the supplier will have a GST number, but still who will pay taxes? Recipient will pay taxes. Why? Because it is notified that the recipient should pay taxes. Because it is notified, in those cases, the entire GST is paid by recipient. But in 9.4, I have called it with the name called RCM for inward supply from unregistered supplier. Okay, so in this 9 subsection 4 cases, the supplier has to be unregistered. Only one notified case that we have for us to discuss. If you look at your examination also, they generally don't ask question on 9.4. They don't ask that notified case. Real estate questions are not there. But 9.3 every exam. Right? In 9 subsection 3, there are two segment of RCM applicable. One is there are notified list of goods which are under RCM. There are notified list of services which are under RCM, which means when I give certain goods also, there can be RCM applicable. Sometimes when I supply service also, RCM can be applicable. But for your inter-syllabus, only service RCM is applicable. Okay. Because your inter-syllabus has only services, don't think that only service is under RCM. Even goods are also under RCM sometimes. Right. So just understand that in the previous example, I have given you a goods called cashew nut shelled or peeled. And it said it is under RCM. BD wrapper leaves, tobacco leaves, these are all under RCM, but not tested in your exam because it's not part of your syllabus. Now, I'm giving you an exam tip, which is very, very important tip for you to look at. Don't take the photo now. I have to remove something, then you can take the photo. This is for a specific type of people, not for everyone. Okay, I'm pretty sure some of you are there wherein that question is going to come at some point or the other, wherein you will ask me, should I go ahead and then learn section number or not? Some of you definitely ask me that question in your examination. So there are people who've been occasionally asking me that question. Even today when I'm in our live, you're asked me that question on like how to present, should I write, how should I write, and all that. This is going to be a examination tip. Like, say I'm not somebody who's an advocate of writing every section, every circular, every notification number in your examination. And I generally don't prefer that, because after you qualify, you can always Google it and then write, or go to ChatGPT and then write the correct one when you give an opinion to your clients. So I don't think ICAI should also focus on whether they're giving the correct number, because something that you're going to Google later. So ICAI should always prepare our students to ensure that they give correct interpretation of the provision. So it should be analytical in terms of the provisions. It should not be like just reproducing some numbers, right? So this is my personal opinion. However, when you're writing answers, you cannot have your entire answers written without zero sections, because you're writing an answer from an act. Act will have sections. So you should refer back to some sections when you're in your answers. So there is no extra marks you will get because you write the section numbers, but you will impress the valuer. And if you ask me like, sir, tell me a bare minimum notification that I have to learn so that I can write it in the examination, this is the bare minimum I want you to look at. Even if you don't learn any other notification number, you learn this table alone. How do you learn this table? The easiest method would be write this table into a chart, or write this table into a paper, stick it on the place where you're sleeping. Every day morning you look at it. It will be a very easy learning. In 3 days you will learn this entire thing. Just get this picture in your head. So there are exemption, there is charge. Every exam there is a question on exemption, there is a question on charge, but you have to be careful. Sometimes the question will be on intrastate supply under reverse charge. There will be question on interstate supply also under reverse charge. If it is intrastate supply, the section number is different. Interstate supply, section number is different. The structure is same, but notification number also is different. So we only have at inter level only services for us to learn. So what I've done, I've kept it like this. So if it is exemption of services that you're learning, you're basically looking into, if it is intrastate supply, you're learning the exemption from section 11 of CGST Act. And exempted services are notified under notification 12 bar 2017. And if you're looking at interstate supply, which is IGST Act, and you're looking at exemption, you are basically having, see, exemption in intrastate and interstate is same. But when you write answer in the examination, if it is intrastate, you will write notification 12 bar 2017 read with section 11 of CGST Act. If it is interstate supply, you will write it as notification 9 bar 2017 read with the 6 of IGST Act. Similar is the case with RCM. You're writing answer with some answer for RCM, and you're writing intrastate supply under RCM. You will refer 9.3. That is something that we have just read. 9.3 read with notification 13/2017. Now you're writing interstate supply under RCM. Your answer should refer back to notification 10/2017. You should refer to notification 10/2017 read with section 5 subsection 3 of IGST Act. So 9353. Section 11, Section 6. There is one small trick that you can keep it in your brain to remember the notification number. The first notification in the chronology of order is exemption. Exemption plus 1 is RCM. What is exemption under CGST? 12. What is RCM under CGST? 13. 12 plus 1. What is exemption under IGST? It is 9. 9 plus 1, 10 is the RCM under IGST. This is how you should remember. So if you have not taken a photo of this, just take a photo and then keep it with you. If you want to write with the notification number, you look at your valuer would be super impressed. No, this is how you change. If you have somebody who written the exam, could not get the correct answers, or did not, the exam did not go in your way, the next exam you should do something better. No, this is one thing that you can do better. So next time you write an answer, you're writing the answer with the notification number quoted inside it, and you can smartly place it. Okay, so I'll tell you, we will look at some questions to understand how we can put this into practical answers, the section number, notification number. But if you don't have this with you, just take a photo and then keep it. You've done that. Can I go ahead? Can I go ahead? Okay, perfect. Now, what our learning is going to be like, we are going to learn what are the RCM cases of services. What services would be under reverse charge mechanism? I said there are 20 services under notification 13/2017. We will learn that. But while we learn that, we are also learning exemptions together with it. Industry discussions. Well, I'll try to be as quick as you answer. That's my point. If you're answering faster, your chat answer comes faster, I will go faster. Because this chapter is something that you cannot skip. This will determine how good you are. And today itself, after I do a quick recap, you have to take some efforts, look at this at your end, go through the entire chapter, do all the connection, wherever you require photos, and then just take the photos and then keep it with you. But do refer that today itself. Like, ensure that you're strong in this particular chapter today. Can you do that? Can I have a thumbs up? Done? Okay, perfect. So let's go ahead. So this list, I have written a particular list, and in this list, what I have done is that I have numbered, and then I have kept the list. All these lists that I have kept here will be taxed under reverse charge mechanism. This is exactly there in your ICA material. So if you're somebody who is referring ICA material, do not have my material, so you should open charge chapter, look at that RCM table, but it is not in the order in which ICA has given. I have clubbed for the easiness, I have shifted some order, but otherwise you will be reading the same area in your chart chapter, right? So what is your page number in ISM? If you're online, then somebody can help, so I can tell others with ISM to look at that page. So I'm referring to notification 13/2017. The same notification 13/2017 is repeated in notification 10 The same thing, this is CGST. Notification 13/2017 is CGST. It is section 9.3. Same I'm referring to IGST. It will be 5 subsection 3. Notification number gets changed to 10/2017. This is how you will refer, right? So you are in page number 3.16. Can someone confirm if it's 3.16? 3.16 in your ISM. And confirmation is thumbs up. Done? Okay. So I'm looking into the first one, which is insurance agent. They said insurance agent providing any services to any person carrying insurance business in taxable territory would be under RCM. Logically, understanding is very simple. The thought process is very simple. In India, there are so many insurance agents providing services to very less number of insurance companies. Insurance companies will pay them commission. Is this commission taxable? Is an insurance agent an employee of the insurance company? No. They are commission agents. Are their commission taxable? Yes or no? It is taxable. Why I asked you that question? Are they employees? What if they are employees? Would it be taxable or not taxable? Not taxable, because if they are employees, they will receive salary. Is salary considered to be a supply? No, because negative list. Okay, Schedule 3 talks about employee providing services to employer and receiving salaries, not even a supply. If they are not employees, they are receiving commission, it would be taxable. Who has to pay taxes on the commission received by insurance agent? It will be paid by the insurance company. It is notified under RCM. Is it clear, the first case? LIC is paying 1 lakh rupees commission to an LIC agent. Will they pay 1 lakh plus GST to LIC agent? No. They will only pay 1 lakh rupees to LIC agent, and LIC itself, LIC is the consumer. LIC is the recipient who is receiving services from agent. So LIC itself will pay tax under reverse charge to the government, is what is notified under 9.3. Is it clear? Is that first case clear? Everyone, please have a thumbs up. I want you to be very sure about these areas. Any confusion, you ask me to repeat. I will repeat with an example and all that. But I want you to be 100% clear. So look at one more method in which your answer can be better here is, I have looked at the word called taxable territory. This is applicable only when the recipient is in taxable territory, which means an insurance agent located in Tamil Nadu, in Chennai, providing services to Tokyo Insurance in Japan, will it be taxed under reverse charge? No. Why? The recipient is not even in India. So how will it be ease of collection of taxes? So this RCM under these sections will be applicable only if the recipient is located in taxable territory. When you write the answer next time under RCM, write this word called located in taxable territory also with it. Then next 4 cases you can club together and then learn. I would like to say that 2, 3, 4, 5 will be all relating to banking industry. For those people who did not attend my classes regular, I would like to tell that how we generally approach RCM cases is like this. We separate RCM cases into 2 type of RCM. One is general RCM, another one is conditional RCM. I'll tell you how to interpret RCM. To interpret RCM better, I can always look at whether an RCM case is a conditional RCM. What is a conditional RCM and general RCM? In general RCM, it says that any type of this supplier providing any type of recipient would be under RCM. If it is given like that, the entry is given like that, I would call that RCM as general RCM. However, in some RCM entry, when you read, you will understand not always the recipient will have to pay taxes. Sometimes they will put a condition. They said supplier should be an individual, recipient should be a body corporate. Likewise, they would have attached a condition on top of it. If there is a condition attached on top of it, we would call it as conditional RCM. Are you guys understanding what is the structure of it? Okay, so conditional RCM and general RCM is your separation. So as and when I read, first we will discuss, is the conditional RCM or is it general RCM? Second case, supplier is a recovery agent providing any services to a banking company, financial institution, including NBFC in taxable territory. The banking company NBFC is liable to pay tax under reverse charge mechanism. Looking at this with an example would be like this. Look at the example. Again, these examples are there in your tax school free resources for you to freely look at. So the PDF will be available. If you want to look at chart chapter, will be available in the example folder. Okay. Now, recovery agent is a person who helps the banks to recover the loans that they have given and they are not able to recover by themselves. Suppose this person, you look at his eyes, he looks like a gunda who is going to recover loans, right? So this fellow is recovering a loan that is given by the bank. A bank has given a loan to a customer, 10 crore. After taking the loan, this customer, vanishes. Now the bank is not able to recover. So bank has given this work to a recovery agent. Recovery agent, used all his muscles and then tried to recover this amount, recovered this 10 crore and given back to the bank. Now, bank has given a commission to this recovery agent. I have written 5 questions. If you answer all the 5 questions, you have learned this entire case. Question number 1. Is the recovery agent an employee of the bank? The answer is no, because he is not receiving salary. He will be receiving commission. So, he is not an agent. He is not an employee. Then, if the answer is no, is the commission taxable? The answer is yes, because if it's salary, it's not taxable. If it's commission, it will become taxable. Next question, who has to pay GST on the commission to the government? Who's the supplier, who's the recipient? Supplier is the recovery agent, recipient is the bank, but the tax is to be paid by the bank. So we would call this as what charge? Reverse charge mechanism. Then, fourth question, a recovery agent is a registered person. What if this fellow has a GST number? Will the tax be still payable by the bank under reverse charge? Yes. Why? 9 subsection 3 and 9 subsection 4, I made a difference. I said 9 subsection 3 cases, sometimes supplier could even have a GST number. It would be still taxed under reverse charge. So even if this recovery agent has a GST number, tax is still payable by the bank under reverse charge. Then, point number 5. Recovery agent is a body corporate. Recovery agent is a body corporate. Still, would it be under RCM? Yes. So this is not a conditional RCM. All type of recovery agent, I have written examples. A recovery agent could be an individual, partnership, LLP, company, any type of constitution. All the cases, who is liable to pay taxes? The bank is liable to pay taxes, provided the bank is located in taxable territory. Is it clear to all of you? Is it clear to all of you? Can I have a thumbs up if it's clear? Okay. So let's go back to the next case. So first case and second cases are over. Now I'm going into the third case. Individual direct selling agent, other than partnership, body corporate, LLP, etc. They provide a service to a banking company, financial institution, including NBFC in taxable territories under RCM. You tell me, is it a general RCM or a conditional RCM? It is a conditional RCM. Why am I calling this as a conditional RCM? Because look at the supplier. Not every direct selling agent would come under this. They're saying that it would only be under RCM if the direct selling agent happened to be a individual. So we can say this is a conditional RCM, not applicable in all the cases. Who's a direct selling agent? These are the people who will help the bank to provide loans. Selling agents, they will sell bank's product like deposit and loans and help the bank to mobilize more deposit, help the bank to give more loans. These are the people who are called as direct selling agent. Example number 2. Carefully be with me and then try to understand this. Mr. Raju is a direct selling agent. This fellow is actually helping SBI to give loans to VGuard, a company. So VGuard has taken loan from SBI through this direct selling agent called Mr. Raju. Mr. Raju is receiving 10 lakh commission. I will repeat the same question. Is Raju an employee of SBI? No, he's an agent, direct selling agent. We fondly call them as DSA. Next question would be, is this particular Raju receiving salary? No, he's receiving commission. So is it taxable? Yes. Who's the supplier? Raju. Who's the recipient? Bank. Who's liable to pay tax here? Raju under FCM or bank under RCM? It will be bank under RCM. Bank will pay 10 lakh to Raju and GST of 1,80,000 directly to GST department. Why? Here a direct selling agent is Mr. Raju. Sometimes they will give you the word like Mr. M bar S, sometimes they'll give you, which means that they're not an individual. Have you seen? Mrs. is the term. M/S. Have you seen in some question? Like to denote a partnership firm, to denote an organization, they use the word M/S. MR, MS, all of these are individuals. Right? So Mr. Raju is an individual, so it will be under RCM. Instead of Mr. Raju, look at the second part of this example. The same loan was given to VGuard through another direct selling agent, which is called FinFast Private Limited. SBI is giving commission to this, commission of 10 lakh to FinFast Private Limited. Next question would be, is this commission taxable? Yes. Would it be taxed under RCM? Yes or no? No. Why? Because here the direct selling agent is not an individual, it is private limited company. Is the RCM that we have looked at a conditional RCM or general RCM? It's a conditional RCM. When will it be paid by the bank? Only if the direct selling agent is a individual. Here it's a private limited company. So here the bank will pay GST also to the company, and the company will pay GST under forward charge mechanism, normal method. Is it clear, all of you? Is it clear? Can I have a thumbs up? This is clear. Okay. Then next one is slightly a fresh word for you to look at. There are two set of people that you have to understand here. One is business facilitator. Another one is agent of a business correspondent. Look at the fourth case and fifth case in the table here. You can look at fourth cases. Business facilitator providing services to banking company located in taxable territories under RCM. Agent of a business correspondent providing any services to business correspondent located in taxable territories taxed under reverse charge. We need to learn this together with an exemption that is there in notification 12/2017. Your learning would be complete only if you go for 4, 5 and the exemption. Can we read the exemption? What it says? Services by business facilitator, correspondent or agent of a business correspondent for a rural area branch of a banking company will be exempt from GST. So they're saying that if they're getting commission from a rural area branch would be exempt. Multiple examination they have tested this. But the biggest problem is that business facilitator and correspondents are very new type of people which you would not have come across. So generally students will have a problem in understanding this. Who's this business facilitator? Who's correspondent and all that? Don't worry. I'm an ex-banker. 3 years of banking experience. I'll tell you who's a business facilitator, who's a correspondent. I've worked with them. Okay. Business facilitators are the people who will help the bank to open bank accounts. A lot of banks want bank account to be opened, but to open the bank account, now only we have video KYC and all that. There is a huge form that we need to fill, right? A lot of people will not open the bank account because that form is very complicated. So business facilitator are those companies which will help the bank to open bank account. Every time they fill up the form and then get a bank account open, bank might give them 250 rupees, 300 rupees, 1000 rupees, something like that. Question number one, are they employees of the bank? No, they're getting money as and when they open the bank accounts. Now, whatever money they get, would it be taxable? Always taxable or sometimes taxable? It is sometimes taxable. Why? If they are helping a rural branch to open bank account, that commission or whatever money that they get would be exempted. Only non-rural branch. RBI says that your branches can be broadly classified into urban branch, metro branch, semi-urban branch, rural branch. If the moment it is rural branch paying the commission to business facilitator, it will be exempted. Then, who's business correspondent? Business correspondent are the people who operate micro ATMs. They function using agents. Micro ATMs are like smaller than ATMs. These ATMs are given, micro ATMs are given to petrol pump, mobile shops and all that. And this is connected to a business correspondence online system, and then it is connected to a bank. So if somebody wants to withdraw money, generally we go to ATMs. Instead of going to ATMs, you can go to micro ATMs and then withdraw money using Aadhaar AEPS kind of a system. So these, what is the benefit for allowing people to withdraw money through micro ATMs? So the bank has a tie-up with business correspondent. Business correspondent has agents. This is how it will work. Okay. So there are three people involved in a transaction of business correspondent. Business facilitator for account opening. Business correspondent is slightly different. So I'll carefully write a chart for you to understand business correspondent, right? Say, suppose there is a company called business correspondent. Business correspondent. What they do? They have a tie-up with whom? With a bank. What is, why they have a tie-up? They said the bank, hey bank, if you have a tie-up with us, we have a lot of agents. All of these people have something called as micro ATMs. Okay. These people have micro ATMs. So all these micro ATMs can be used by the customers of the bank. What is the benefit for the business correspondent? The bank will pay based on the transaction a fee or a commission. Is it taxable or not taxable? This is transaction number 1. Is it taxable? Yes, it is taxable. Would it be taxable under forward charge or reverse charge? It is taxable under FCM. So please remember, this is not what is under RCM. This is one entity, business correspondent, another entity, bank. It will be taxed under FCM only. Whatever fee that is received by the business correspondent, if there is a share of revenue, the share of fee that is given by business correspondent to these agents who are having micro ATMs. Now, who's providing services to whom? The agents are providing services to business correspondent. Is this supply of service taxable? It is taxable. Who will pay tax on this? It is taxable under RCM. Who will pay? Business correspondent will pay. So this transaction, I would call this transaction number 2. So business correspondent transaction happens in 2 segments. One is business correspondent to bank, which is under FCM. Another is agent to business correspondent, which is taxed under RCM. Is it clear to all of you? Let me give you a summary for this. So this is what you should remember for the examination. Either you can take a photo and then keep, or you can scribble and then keep. There are 3 transactions that we have here. Transaction number 1, business facilitator to a banking company. It is under reverse charge. Second, business correspondent to a banking company, which is under forward charge. The third one, agent to a business correspondent, which will be taxed under RCM. Are you guys understanding this? Everyone focus on the screen, please. So we have 3 transactions. Some of them are under, so please remember, correspondent to bank is under FCM. That's what is the most important part, right? So I have written as an example for you to just verify and then get the answer to this. Let's see whether you're getting the answer for this. So there's a company called Kochi Microfinance Private Limited. There's a company called Kochi Microfinance Private Limited, which is a business correspondent. So they have a lot of server system. They have so many equipments called as micro ATMs. They have appointed a bunch of people. These people are agents. They have appointed agents. And Kochi Microfinance Private Limited went to a bank called Canara Bank and told what? Hey, Canara Bank, for your metro branches, again, if the branch happened to be a rural branch, the commissions would be exempted in business correspondent also. If it's a urban branch, semi-urban branch, metro branch, the commission would be taxable. So let's say take Canara Bank to be a metro branch. Canara Bank says, Canara Bank and Kochi Microfinance have a tie-up. Using this tie-up, Canara Bank customer, you can see there's a customer of Canara Bank. They can go to any of this agent, and then use their cards and then withdraw money. This is the benefit that they're getting. For this, Canara Bank is paying commission to Kochi Microfinance, which is 20 lakh. Will it be taxed under FCM or RCM? It will be taxed under FCM. So, bank will pay 20 lakh plus GST to Kochi Microfinance. Now, this 20 lakh, can Kochi Microfinance keep it as their income? No. A portion of this will be shared to multiple agents depending upon how many transactions they have done. Now, these agents are providing services to Kochi Microfinance's transaction number 2. Say out of 20 lakh, 10 lakh rupees is paid by Kochi Microfinance to agent for the services received from agents. So, agents are providing services to Kochi Microfinance and they are receiving 10 lakh. Would this 10 lakh be taxed under RCM or FCM? It will be RCM. So, Kochi Microfinance will have to pay tax under RCM on this 10 lakhs, 18%, 1,80,000, and Kochi Microfinance would also have to pay tax of 3,60,000 for the commission received from Canara Bank under FCM. So Kochi Microfinance will have two tax payment. One will be under FCM on the outward supply, another one will be under RCM on the inward supply. Are you guys understanding this? Is it clear? It's slightly tricky. You have to carefully understand this. Is it clear, all of you? Okay. Then what I'm going to do next is I'm going to jump directly to ITC. I'm going to discuss the connection between RCM and ITC before I go into the other RCM cases. I'm going to take you through a additional understanding. Carefully be with me and then understand this. If you want to solve, okay, somebody asked me that question, no, sir, what about solving a full length question? To do that, I want you to have this understanding. There are two notes that it's very important for your exam. Now all the examination from that easy GST examination, we're going into good examinations. Huh? The last two exam, if you look at GST's little, new questions are coming in. They're trying to test you with some concepts, some extra understanding. So all that will revolve around these two understandings. So two notes that I'm going to give you here. Number one, look at a simple transaction here. There is supplier A and supplier B. Supplier A is supplying goods to supplier B and the value of goods is 10,000 rupees. It is taxed under reverse charge. So who will pay taxes to the government here? Will supplier A pay taxes or supplier B will pay taxes? There are two registered person. I cannot say supplier A and supplier B. Supplier A supplying goods to recipient B. Let me change that wordings. And supplier A is supplying goods of 10,000, but it's taxed under RCM. Who will pay taxes? B will pay taxes because it's under RCM. Let's assume that goods are taxed at 12%. So how much money needs to be paid by Mr. B here? 10,000 into 12%, that is 1,200 rupees, right? I can have written Mr. B, registered person, will pay tax on inward supply under RCM, which will be 10,000 into 12%, 1,200 rupees. Now I have written a question there. Can Mr. B utilize the existing ITC balance to pay this tax under reverse charge? Yes or no? Can they use this? Can Mr. B pay this 1,200 with your ITC and the knockoff? Yes or no? I need a thumbs up or thumbs down for that. Can they do that? The answer is no. Why? Because whatever tax you have to pay under RCM needs to be paid by cash. You cannot use your ITC to pay that. So this needs to be paid by cash. Understanding? This is what I have written as note number 1. If somebody wants to take a note of this, this is where you take a photo and then keep it with you. Note number 1. Tax payable under RCM cannot be paid by utilizing ITC, that is electronic credit ledger. RCM tax needs to be paid by cash, that is electronic cash ledger. Once paid, it can also be availed as ITC. What is the meaning of that? Okay, wait there. Yeah. So I've said you cannot pay this 1,200 by credit, you have to pay by cash. Now I'm continuing that example. So Mr. A has sold product to Mr. B. Mr. B paid tax under RCM 1,200. After buying the product, Mr. B is also a registered person. What is he doing after buying the product? Mr. B, after buying the product, sold this to an unregistered customer. There's another person who's an unregistered customer. He is ultimately buying this product. All right. So an unregistered customer got the product which Mr. B purchased for 10,000. He sold it to a customer for 25,000. and paid 12% GST, which is 3,000 rupees. So totally customer, unregistered customer paid to Mr. B 28,000. What is the outward tax liability? Outward tax liability of Mr. B, it is 3,000 rupees, whatever they collected from the customer on the outward supply. So I've written it here. 3,000 is OTL. OTL is what? Outward tax liability. Next question to you is, can Mr. B take the input tax credit of this 1,200 paid under RCM? Yes or no? The answer is yes. After paying the taxes under RCM, whatever paid under RCM can also be taken as ITC. You guys understanding? This is what we have written in note number 1. Let's look at it again. Tax payable under RCM cannot be paid by utilizing ITC. This needs to be paid by cash. Once paid by cash, that is also allowed as ITC, because I purchased and paid tax on the purchase. That is my inward supply. Whatever tax paid on inward supply can be taken as ITC. So what is the net GST payable by Mr. B? It is payable. It will be 1,800. This needs to be paid by cash. Question to you. What is the total GST paid by Mr. B by cash for the month? Exam question. Normally they ask this exam question. Keeping B as the center point, they ask the question, how much is the total GST paid by Mr. B by cash for this month? Net GST is 1,800, which is paid by cash. Before that, they had paid 1,200 by cash as well. So in total, they would have paid 3,000 by cash. This is how you will answer that. But 1,800 is net GST payable. 1,200 was an tax paid under RCM. Put together, they had paid to the GST department for this month 3,000. Is that clear to all of you? Is that clear how the question is generally asked? Can I have a quick thumbs up if it's clear to you? Can I go ahead? Okay. Now, I'm going to go to Mr. A and then explain that part also. Very important. Huh? Look at Mr. A here. What is the, when Mr. A is making supply of goods to Mr. B? Okay. What is the outward tax liability for Mr. A? What is outward tax liability for Mr. A? You want the answer on the chat box from online guys? What is outward tax liability of Mr. A? It is 0. Why? When Mr. A sold a product to Mr. B, Mr. B is paying tax under reverse charge. So A has 0 liability. Is that clear? Right. Then, to sell the product to Mr. B, Mr. A has purchased some raw material from another registered person. I'm talking about this transaction. Mr. A has purchased, Mr. A has made inward supply for supplying goods to Mr. B. How much inward supply? 2,000 rupees worth inward supply. Paid a GST of 360 rupees. Next question. Next question. Can Mr. A take the ITC of 360 rupees which is paid on purchase of? Can Mr. A take the ITC of 360 which is paid on purchase of product which was sold under RCM? While selling, they paid 0. On the purchases, they had paid 360. Can Mr. A take the ITC? Yes or no? Can they take ITC? The answer is again no. Why? Whatever purchases they made, when they are selling it to Mr. B, is Mr. A having any outward tax liability? No. If there is no outward tax liability, against what I will set off? So I have written this in note number 2. There are 2 notes that we have to understand. What is note number 2 says? Let's go ahead and then read note number 2. Carefully read this note number 2 for me. If registered person's outward supply is taxable under RCM. So Mr. A is making outward supply. Who's paying taxes? Mr. B is paying taxes under reverse charge mechanism. So registered person's outward supply is taxable under RCM. Then GST is payable by recipient. Okay. So Mr. A is making supply to Mr. B. Who's paying taxes on that? Mr. B. Recipient is paying tax under RCM. Such a registered person, Mr. A is the registered person who is supplying to Mr. B. Such a registered person cannot avail ITC on the inward supply of goods or service attributable to such outward supply under RCM. What is the meaning of this? Say, I am somebody who is under RCM. I got some goods or services where I pay tax under RCM. Can I pay this tax by utilizing ITC? No. After paying, can I take the ITC? Yes. Now I'm talking about somebody who sold the product under RCM. I'm the seller. I sold my product. Say I have this product, this goods. This I sold to a customer. And customer is paying tax under RCM. I purchased this product from someone. I paid some GST. Can I take the credit of this? No. Because I don't have any outward tax liability while I am selling it to the customer. These are the 2 points that you have to remember. Is it clear? Online people, can I have a quick yes on the chat box if it's clear? Chams from Chennai, can I have a quick thumbs up if this is clear? These 2 points are very important for you to solve your questions. Are these both points clear to you? Okay. So in case you have not taken a click of this, I'm giving you the whole thing for you to just look at your end. If you want, you can just take a one photo and then keep it with you. If you want to look at it, you can look at it later. If you've understood, perfect. Nothing like that. So if you know this much, I will be able to go and then do net GST computation together with charge. That's my intention. Can I go ahead? Okay. Now let's move to the next RCM case. Point number 6. Any person providing sponsorship service to a body corporate or partnership firm, including LLP, is taxed under reverse charge mechanism. You tell me, is it a conditional RCM or general RCM? Conditional RCM or general RCM? First is conditional RCM, 2 is general RCM. It is a conditional RCM. Why? On the recipient part, you look at, it will be taxed under RCM only if the recipient is a body corporate or partnership firm. The important wordings that they have given. Okay, so it's little tricky to remember this much. Yeah. But understand, sponsorship service would be a conditional RCM. So whenever you learn something, which one was the earlier conditional RCM that we had? It was direct selling agent. So after that, it is sponsorship service. Quick example for you. So what I'm going to do is that I'm going to quickly teach you something more in sponsorship so that something from supply chapter also gets over before that. Yeah, this is something on donation versus sponsorship. Let me first differentiate between donation and sponsorship. First question, is donation subject to GST? Are they liable for GST or not liable for GST? The answer is not liable for GST. Why? To have GST applicable, there should be a consideration. Whatever donation I give, am I getting something in return? No. So there is no consideration. It will not even become a supply, no GST. What if? Okay, then there is a circular clarification which says that sometimes what happens is that when we give donation, the charitable trust or religious trust, they write the name of the donor in the premises of the charitable trust. So they are getting something. They're writing the name now. To give an example, I have written this is actor called Chiranjeevi Garu in Telugu film industry. So Chiranjeevi Garu is actually giving donation to Tirupati Temple Trust, because Tirupati Temple Trust wants to have a new Kalyana Mandapam or some new Mandapam to be built there. 10 lakh rupees donation was given by Chiranjeevi Garu. After getting the donation, what Tirupati Temple Trust has done, after doing all the Mandapam, which you can see here, they have written something on the pillar. Okay, you're not able to read it now, don't worry, I have zoomed it for you. What is that they have written? Donated by Chiranjeevi. They have written it like that. Right? Question is this. Chiranjeevi has given 10 lakh. And what is that Chiranjeevi has got in return? The Tirupati Temple Trust has written the name of Chiranjeevi Garu in the premises. So Chiranjeevi Garu is getting publicity there. So would it become a supply is the question. Okay, next. Before you answer that question, there's a circular clarification. I wanted to put another case there. Tirupati Temple Trust is also conducting a temple festival. Because there is temple festival and lakhs of people are going to come, Dharma Productions, which is owned by this guy called, Karan Johar. You heard of this film producer called Karan Johar? So he owns this Dharma Productions. He basically copies South movie and then goes to North. That's what they basically do. All the North movies are done like that. Right? So Dharma Productions is becoming the title sponsor for Tirupati Temple Festival. So Tirupati Temple Trust and Dharma Production, they sign an agreement saying that all the places there will be Dharma Productions branding given, and Dharma Productions will give 1 crore rupees to Tirupati Temple Trust. My question is this 1 crore rupees taxable? Question is this, whether Chiranjeevi the actor giving 10 lakh and Dharma Production giving 1 crore, are they both same? Are they both same? No. Can you say both of them are getting publicity? No. Why? When Chiranjeevi is giving 10 lakh, is Chiranjeevi expecting them to do a publicity? No. So they said, simply because the trust is putting the name of the donor in the premises of charitable trust receiving donation, it will not be treated as a supply. It is not aimed at publicity. It is just a measure of gratitude. There's a circular which says that just because you wrote the name of the person, it will not become. However, if the business is writing its name, it means that they're trying to get what? Publicity. Then it will become a sponsorship service and it will be subject to GST. Are you guys understanding this? So Dharma Production 1 crore is taxable. It's a supply. Chiranjeevi's 10 lakh is not a supply because there is no contractual reciprocity. Chiranjeevi did not donate this 10 lakh to get his name written there. The Tirupati Temple Trust did not write the name to get this 10 lakh. So there is no connection between the activity done by Tirupati Trust and the 10 lakh given. So that will be still considered as donation. Are you guys understanding this fully? Are you understanding the thought process? Clear? Okay. Now, what is this RCM for sponsorship services? They said supplier can be any person, but if the sponsorship recipient, the one who is giving the money, is called as the recipient, right? The one who is giving the money happened to be a body corporate or partnership firm, it would be taxed under reverse charge mechanism. That is what is the RCM cases. Okay, look at this. Little old IPL's logo, but still the sponsorship remains the same. Tata is sponsoring IPL. Okay, who's giving money to whom? Tata is giving money to IPL, and the money is 250 crores. Who's the supplier? Who's the recipient? Supplier is IPL because IPL is getting the money, and who's paying the money? Tata is paying the money. Tata is the recipient. Is this 250 crore taxable or not taxable? Is it donation? No, it is sponsorship. It is for advertisement value. So is this taxable or not taxable? Taxable. Who has to pay taxes on this? Will the taxes be paid by Tata under RCM, or the taxes will be paid by IPL under FCM? It will be paid by Tata under RCM. Why? Because you have to look at the conditional RCM we just read. What is this conditional RCM says? Look at the 6th point. Any person providing sponsorship services to a body corporate or partnership firm. Is it a body corporate? Yes, Tata is a body corporate. What is a body corporate? A company is a body corporate, separate legal entity. An LLP is a body corporate. Okay, so body corporate means in GST you have to remember two people. One is a company, another is an LLP. So that's why I've written body corporate including LLP or partnership firm. They will pay tax under RCM. Now, what if it is not? What if it is not a, suppose Tata IPL is asking for sponsorship and sponsorship money is given by me. I'm giving the sponsorship money and I'm saying that, okay, I'll put my name on the players, Chennai Super Kings, I'll sponsor. Okay. Now the sponsorship money is given by an individual. Will it be taxed under RCM or FCM? It will be under FCM. Why? because the recipient has to be a body corporate or partnership firm. Instead of suppose instead of me sponsoring, suppose if it's my CA firm, okay, my CA firm's name is LDS and Company. So if it's LDS and Company who's sponsoring, it's a partnership firm. Will it be under FCM or RCM? It will be under RCM, because when the recipient is body corporate or partnership firm, it will be under RCM. This is the structure that we have. Is it clear, all of you? Is it clear? Thumbs up and quick yes. Shall we go to the next case? Okay. Director of a company or a body corporate, including LLP, providing any services except the service in his personal or private capacity to a body corporate or a company located in taxable territories taxed under RCM. Director to a company is under RCM is what they're saying. They've asked multiple questions on this. So what I've done a chart for it for you to understand. Page number 48, I have put a chart. Look at this chart. You look at this chart because there's a circular clarification. All of that would be understood by this chart. If you want to look at the summary, this is the chart that you want to keep a photo with you. If you go through this, you will be able to answer all the questions in directors. Broadly, the directors can be classified into full-time directors and part-time directors. Who are full-time directors? We generally call them as managing director, whole-time director, WTD, ED, executive director. These people are full-time. Then there are part-time directors like non-executive directors or independent directors. What is special about managing director, whole-time director, or executive director who are full-time with the company? These directors who are full-time, they generally go ahead and then receive two payments. One is salary. Another one is a sitting fee. Why? Every time these people are attending a board meeting, they get an additional payment. Right? We call this as fee or sitting fees. An independent director is a part-time director. He will not be receiving any salary. He will only be receiving a sitting fees. Now, I already told you in an earlier case that when an employee receives salary, that even include director's salary, will not be treated as a supply. But whenever he is an independent director, he would not be receiving any salary, so we don't have any confusion. So we can also say that whenever there is a managing director, whole-time director, executive director is receiving salary, it will not be a supply and there is no GST applicable. However, if they are receiving a fee, it would be subject to GST and it will be taxed under RCM by the company. So, how do you identify whether the amount paid to a managing director is salary or it is a fee? The clarificatory circular says that the easiest method is to look at the TDS done by the company. If the company is giving 1 crore rupees to the director, I have to look at under which section of income tax TDS they deducted the TDS. If the TDS is deducted by the company under 192, what is the meaning of it? Is it salary or is it a fee? It is a salary, because income tax section 192 says about TDS on salary. But if it is a fee, they would have deducted TDS under which section? 194J. So you can look at the chart that I have written it like that. Type of director is managing director, whole-time director, executive director. If the payment is salary, IT TDS would be 192. It's not a supply. GST is not payable. There is no charge, because only after GST is payable, I should discuss whether it's under FCM or RCM. If the same managing director is receiving a fee, the TDS would have been deducted under 194J and it is a supply and GST is payable and it will be payable under RCM. Look at the second part, which is independent director. They will not receive salary, they will only receive fee. IT TDS would be under 194J and it will be a supply and GST will be payable and it will be payable under RCM. I've written service by directors other than in the capacity of a director. Like say the director is renting a machinery, will not be taxed under RCM because the service is not provided in the capacity of a director. This is the chart says. A quick example would be like this. Say Baiju Ravindran is the managing director in Baiju's learning app. He is getting 1.5 crore from Baiju's. 1 crore, they have Baiju's learning app has deducted TDS under 192, which means this 1 crore would not be taxable. There is another 50 lakh paid by Baiju's app to Baiju Ravindran, which is the managing director, which is wherein they have deducted TDS under 194J. Would that be taxable? Yes. On this 50 lakhs taxes payable not by Baiju under FCM, it will be paid by Baiju's learning app under reverse charge mechanism. That is your understanding. What if Baiju is an independent director? He would not be receiving any salary. He would only receive fees and it will be fully taxable, will be taxed under RCM. The company would pay taxes. Are you guys understanding? Then, what if this same Baiju Ravindran, what if the same Baiju Ravindran is also providing a consultancy services to Reliance Industries? Would it be taxed under RCM? No, because Baiju Ravindran is not a director in Reliance Industries. So I have written a point, director providing services to the company where he is a director is chargeable to tax under RCM. It is not like, okay, just because Baiju Ravindran is a director, whatever service he provide will not be under RCM. Then Baiju Ravindran had a laptop which was given on rent to Baiju's learning app and he is receiving money. Would it be taxed under RCM? No, because that is not a service in the capacity of a director. So whatever sitting fee would be taxed under RCM is the understanding. Is it clear, all of you? If it's clear, can I have a quick yes or a thumbs up? Is it clear? Can I go to the next RCM case? Okay. Together with RCM, we can learn something extra on registration, but because I did not summarize the registration, I'm just keeping it for later. Let's move to the next case. GTA. Okay. GTA is an industry itself to discuss. For understanding GTA, you need to understand a lot of other provisions. You have a lot of condition that is attached to it. You have to understand exemptions also, and then have an overall understanding of how goods transportation agency GST structure would work. So if you look at your ICA material, you have a separate area of GTA, and in your ICA material, that's a first entry, GTA. Look at when will goods transportation agency service would be under RCM. Okay. The condition goes like this: a goods transportation agency not opting to pay tax under FCM, when they provide goods transportation service to a specified person, would be under RCM, which is not easy to understand. First, we will understand who is a GTA. Whether all transportation by road will be considered to be GTA? No. An understanding is that, say I have 10 sacks of rice, okay, in my house. I want to take this 10 packets of rice. Okay, so I am a farmer, I have paddy field, I have done all the milling and I have rice, 10 sacks of rice. I want to take it to the market and then sell. If I'm in my village, what I will generally do, I would call up to the market and I'll ask a pickup truck or a pickup rickshaw to come to my house. Myself and the rickshaw driver, we put together, load it to the vehicle. The vehicle and myself, we will go to the market, we will weigh it, and then we will give this to the merchant. We will collect money. Say we got 5,000 rupees. I've given 500 rupees to this rickshaw guy. Would it be called as GTA? No. He's doing transportation, but is he a GTA? No. To call someone as GTA, an important document should be issued called as consignment note. So GST provision says that only when the transporter issue a document called consignment note, I would call that transporter as a goods transportation agency. Next question would be, sometimes what happens is that GTA would not only do, okay, say for example Agarwal GTA, very famous GTA in Chennai. If you look at, I have taken their services to shift my apartment. What they have done is that they have come, they have done the packing, they have done the loading, they have done the unloading. All of this has been part of their service. I paid them 10,000 rupees and they have done loading, unloading, packing, everything together with my transportation. Should there be separate bill for loading, separate bill for unloading and all that? No. That's what I have written as point number 4. Look at, apart from GTA services, GTA would provide ancillary services together with it, like loading, unloading, packing, etc. If such services are included in the invoice issued by GTA, it will form part of GTA service as composite supply. The concept of composite supply says it is naturally bundled, supplied in conjunction with each other. One of them is a principal supply. They said supplying transportation together with the loading, unloading is a composite supply. What is the principal supply there? Goods Transportation Agency service is the principal supply there. Okay, so if I'm doing loading, unloading, packing and transportation for 10,000 rupees, all of them together for 10,000 rupees, what will be it considered to be in GST? All of it will be considered as a GTA services. Goods Transportation Agency, GTA. Then, yeah. Give me just a moment. All right, so in case of a GTA, so what you have to understand is that GTA is somebody who could provide something more than GTA services, and all that will be included in the value of GTA services and will be treated in the same manner. Now, when a goods transportation agency is providing services, sometimes the taxes are to be paid by the recipient. Which are the cases where recipient will pay taxes? They said when the recipient happened to be a specified person. Who's a specified person would be the next question. Focus on the screen, everyone. I have a code word to understand who's a specified person. Okay. It's important that you remember this because GTA could be a very complicated understanding for you to have, and for the examination it's not that easy for you to remember. So a lot of question generally comes back on me when when you don't understand this, you will have a lot of question in your head, and when you have the question you will not be able to write answer correct. So be very sure, if you have any questions you should ask me then and there, and then we should finish it off, right? I'm saying that when the recipient is a specified person, it will be taxed under RCM. Who's a specified person? It's BPL scarf is our code word. B stands for body corporate. P stands for partnership firm. L stands for LLP. S stands for society registered under Societies Registration Act. C stands for cooperative society. A stands for AOP, Association of Person. R stands for any person registered under GST. Anybody registered under GST would also be under RCM, including casual taxable person. Then F stands for factory under Factories Act. They're saying that if the recipient happened to be any of these people, it would be taxable under reverse charge. Which also means, can we recap this once? I'll give you a 1 minute so you can look at this BPL scarf and you can learn this with an, I'll give you a 60 seconds time, and then we will recap once again what is BPL scarf. You have to learn this. They've asked multiple questions. I'll tell you a simple question. Okay, once I asked a 5-mark question, and the 5-mark question goes like this: when GTA services is provided to an unregistered person, it will not be taxable under RCM. Validate the statement. They asked a 5-mark question. If you don't have 100% clarity, which you will have only if you give 100% of your attention, if you don't have that clarity, you will not give that answer correct. And that's a 5-mark question. That's a lot. Okay, so which means that they expect you to have full clarity on these areas. Okay, let's look at what does B stands for. Not with it's without looking. What should be B stands for on the chat box? It's body corporate. P should be what? What is the code word first of all? BPL scarf, right? Okay, I'll explain Shravan on the part of it. I'll explain you the full summary of it, but I want to slowly take you to it. B stands for body corporate, P for partnership firm, L stands for LLP, SCARF, S stands for what? Society under Societies Registration Act. Yeah. Then S stands for that. Then C stands for cooperative society. A stands for what? What is A? On the chart box, everyone, what is A stands for? AOP, Association of Persons. Very good. Then R stands for? R stands for any person registered. See, the word is any person registered under GST, including casual taxable person. Right? Then the final one, F stands for factories under Factories Act. Any of these recipient comes in, it will be under RCM is what they're saying. Which we can look at with one example quickly. If you're understanding this example, means you're sorted with this learning. Then we can go to exemption and then consolidate. That's my plan. Say Agarwal GTA is doing the transportation of goods from Reliance Retail, which is located in Bangalore, to Ms. Radha, who is an unregistered individual located in Chennai. So who's the supplier here? It is Agarwal GTA. What service are they providing? Goods transportation service. Okay. Who will be the recipient of the service? Supplier happened to be GTA, who's providing the service of goods transportation. Who's the recipient? Can I always fix the recipient to be Reliance or Radha? No. Normally, recipient in GST is identified as the person who's paying the consideration. Who will pay consideration means what is the consideration for GTA service? It is transportation charges, or we call it as freight. Who's the person paying the freight? It can be the one who's sending the goods, or sometimes it can be the one who's receiving the goods. It is not necessary that the freight has to be paid by. Sometimes delivery charges are paid by the customer, or the delivery charges are paid by the seller. Okay, so the service of transportation can be provided either to Reliance or to Radha, depending upon who's paying the consideration. I'm taking both of them as example. First example, let's assume Reliance Retail is paying the freight. Then I would say the supplier is Agarwal GTA and recipient is Reliance Retail. Then my question is this freight taxable? The answer is yes. Who's liable to pay the GST on the freight? Freight, let's assume it is 1 lakh rupees. Reliance Retail is paying 1 lakh to Agarwal GTA. Is the freight taxable? Yes. Will it be under FCM or RCM is the next question that I'm putting across. When will it be under RCM? When the recipient is a specified person. What is the code word for specified person? BPL SCARF. Can I consider Reliance Retail Limited under BPL SCARF? Yes or no? Yes. Why? B stands for body corporate. Reliance Retail Limited is a limited company, which is a public company, which is a body corporate. So when Reliance Retail is paying 1 lakh rupees freight to Agarwal GTA, Reliance Retail will have to pay GST on this 1 lakh under reverse charge mechanism to government. 1 lakh into GST is 5% under RCM, which is 5,000 rupees. Are you guys understanding this? So instead of Reliance Retail, anyone in BPL's car comes as recipient, they will pay tax under RCM. However, suppose the freight is case number 2. I'm taking this as case number 2. Let's assume that instead of Reliance Retail paying this particular 1 lakh rupees, the freight of 1 lakh is paid by Radha to Agarwal GTA. Then who's considered to be the recipient under GST? It is Radha who's considered to be the recipient because Radha pays the consideration. In that case, is Radha considered to be a specified person? Is it under BPL SCARF? No, because she is an unregistered individual. Next question, can an unregistered body corporate be a specified person? Is an unregistered body corporate, say a company which is not having GST number, are they considered to be a specified person under RCM? Yes. Why? Look at this. In this list of specified person, I have put it across 1 to 5. Even if they are unregistered, they will be still considered to be a specified person. So who is not a specified person? an unregistered individual, an unregistered HUF, an unregistered trust, these people will not be treated as a specified person, all others. So sixth one says that even if an individual, like look at the sixth point that we have here, any person registered, even if there is a sole proprietor, an individual who's running business as a GST number, will they be considered to be a specified person? Yes. But 1 to 5, they are not saying registered body corporate. They are not saying that. They are saying that any body corporate will be considered to be a specified person even if they are unregistered. Is it clear? That's why they asked that question in the old examination. Can an unregistered person can an unregistered recipient be coming under RCM when they receive services from GTA? Yes. An unregistered factory, unregistered society, unregistered cooperative society, body corporate, partnership, LLP, AOP, all of them can be. They don't have GST number means how will they pay tax under RCM? They have to compulsorily register under GST under section 24. In registration, you have something called as compulsory registration, which says that anybody who's liable to pay tax under RCM will have to take compulsory registration. So these first 5 people know if they are coming under RCM, they will have to take compulsory registration and then pay. Are you guys understanding? Now, unregistered individual is not a specified person. What happens then? So going back to our example, everyone, going back to our example, if Miss Radha is considered to be the recipient here, Radha is paying the freight to Agarwal GTA. Radha is the recipient because she pays the consideration. Is Radha a specified person? No, because Radha is not a person under BPL scarf. So will it be taxed under RCM? No. It is not taxed under RCM. Now there is an additional provision you'll have to learn. It's not taxed under RCM. It is not taxed under FCM also. What is that provision? Here you have to read it together with notification 12/2017, which says that if the recipient is not a BPL scarf, it would be exempt under GST. Which means what? If Agarwal GTA is collecting 1 lakh rupees freight from Radha, it is exempt. There is no GST on it. If Agarwal GTA is collecting 1 lakh rupees from Reliance, Reliance will pay tax under RCM. This is your understanding. Is it the only case where it will be exempt? Not only in these cases. Even if it is Reliance retail, some products, if they transport, it will be exempted anyway. What is this some product? There is a code word for that. That's why I said GT is not an easy case. You have to have full attention to understand that in full. So if you look at some product, look at this. Look at the additional exemption that I have written here. Look at this point. Transportation of following goods in GTA is also additionally exempt. What is the code word for those goods? I call it as random 5. What is random 5? Relief material, agriculture produce, newspapers and magazines, defense and military equipments, organic manure, milk, salt, M5, milk, salt, food grain including flour, pulses and rice. Very important code word. Huh? Multiple examination. They've asked this. They're saying that even if Reliance is paying the freight, if the goods happen to be any of this, random 5 are for relief material, agriculture produce, newspapers and magazines, defense and military equipments, organic manure, M is for M5, milk, salt, food grain including flour, pulses and rice. It will be exempted. Okay, let's recap. So what is random 5? R stands for what? Relief material. Okay, R stands for relief material. A stands for agriculture produce. N stands for newspapers and magazines. D stands for, what does D stands for? Defense and military equipments. Okay, so RAND. O stands for organic manure. Organic manure is like your compost, cow dung and all that is organic manure. Pesticides, organic pesticides you can think of. Then fertilizers and stuff, but organic. Then M5, milk, salt, food grain including flour, pulses and rice. If you transport these products also, it would be exempted. So if Reliance Retail is not transporting cloth, instead of that they are transporting relief material for Kerala floods, so GTA, whatever money that is paid to the GTA would not be taxable. That's your understanding. Then look at the second example that I've given you here. Little more complication I'm adding. Look at this. Agarwal GTA is providing full year contract to Reliance Retail. And Reliance Retail is transporting not random 5. So tax is payable under RCM by Reliance Retail. Say 1 crore is the freight paid by Reliance Retail in the second example. And Reliance Retail is a BPL scarf. So they will pay, they're a specified person, they will pay tax at under RCM at 5%, 5 lakh rupees. Now Agarwal GTA is going and purchasing a truck. While purchasing, they are making an inward supply. Who's paying taxes on their outward supply? Reliance Retail is paying. Can Agarwal GTA take the input tax credit on the inward supply? Is my question. They paid, say, value is 30 lakh, GST is 8 lakh. So can Agarwal GTA take the input tax credit of 8 lakh when they, whatever GST paid on purchase of the truck? I've already taught you this. If your outward supply is taxed under RCM, you cannot take ITC on your inward supply. You remember A is supplying goods to B and A has purchased some raw material. Can A take the ITC? No. Whatever inward supply attributable to your outward supply which is taxed under RCM, you can't take any input tax credit. This is the problem. Are you guys understanding this? So because of this, Agarwal GTA would have what is the cost of purchase for Agarwal GTA here? What is the cost of purchase of the truck? 30 lakh or 38 lakh? 38 lakh. Why? They don't have any output tax liability, so they can't take ITC. Their cost will be 38 lakh. Now, Agarwal GTA has represented back to the GST Council and said, we would like to pay tax under FCM. I would collect it from Reliance Retail and I would pay to the government. Government said, no problem, you can get, I will give you an option to pay tax under FCM. So what is the benefit if they go for FCM? They said, GTA can opt to pay tax under FCM at 12% or 5%. If they pay at 12%, now their benefit is that ITC is allowed for GTA on their inward supply. What is that Agarwal GTA can do? Agarwal GTA, if they provide services to Reliance Retail, and Agarwal GTA can opt for FCM, which means that they will collect not 1 crore, 1 crore plus 12% GST from Reliance Retail. Reliance Retail will pay 1 crore 12 lakh to Agarwal GTA. If at all Agarwal GTA has collected tax under FCM, Agarwal GTA will have an outward tax liability of 12 lakh. In that case, can Agarwal GTA take the input tax credit of 8 lakh paid on purchase of truck? Yes. So they will net to pay 4 lakh. So we can say, can I say always? You look at this case. In this case, is the recipient a BPL scarf, a specified person? Yes, it's a body corporate. Is this taxed under FCM or RCM? It is taxed under FCM. Why? Because GTA has opted for FCM. That is why we have these wordings in your RCM cases. Look at the RCM cases that I have written here. All GTA providing to specified person will not be taxed under RCM. What GTA should provide services to specified person? GTA not opting FCM. Because GTA has an option to go for FCM. If they opt for FCM, it would be taxed under FCM only. So, when will it be taxed under RCM? When two conditions are satisfied. Condition number 1 is this. Condition 2 is this. Condition number 1, the recipient has to be a specified person. Condition number 2, GTA should not opt for FCM. Then only it will be taxed under RCM by the recipient. Now, if you look at specified person, I have written something extra there. Yeah. So Shravan has asked that question already when he spotted that particular thing. You can see something that I have written there. I said any registered person would be a specified person. Now I'm telling you that not everyone. If there is a government department which has a special registration taken only for paying TDS, don't consider them to be a specified person. If they receive, say there is a government department who has taken not normal registration, a special registration to deposit the TDS deducted by them under section 52. Person registered only for TDS under section 51, not 52, 51. If they have a special registration only for TDS and they receive services from a GTA, would also be exempted. Okay, don't treat them as a specified person is what they are saying. Now, how do you consolidate this? I've given the consolidation. This is something that you can take a photo and then keep. It's very important. Only if you understand this much, you can actually go and then confidently write the entire answer. What is TDS, TCS, and GST and income tax? That's 1 hour discussion. Okay, so I cannot outrightly answer with you. TDS, TCS are methods of collection of taxes. In income tax also that method is being used. In GST also that method is being used. In income tax, they will do TDS and TCS of income tax. In GST, they do TDS and TCS of GST. That's the one-line answer for you. But then you will understand it better when I'm discussing that. TDS and TCS is not income tax or GST. It's just a method of collection. Okay, look at this. If you don't have the summary with you, don't have my books, then take a photo of this and then keep. This should give you overall understanding. How do you check whether tax is payable under GTA or not? Then how do you check whether it's under RCM or FCM? Every question in GTA, this is the order in which you do. You have to do 2 checks. Check number 1. Before even you decide whether it should be under RCM or FCM, first thing you should decide is whether it is taxable or not. Because GTA services are not fully taxable. So you decide on whether it is taxable or not. How do you check whether it's taxable or not? There are 2 cases where GTA services would be exempted. One, when recipient is other than specified person. Other than specified means other than BPL scarf. Who's other than BPL scarf? It could be an unregistered individual, unregistered HUF. Likewise, I have taught. Or if some government department is the recipient, they have registered but only for TDS. Then they will, when they receive services, if the recipient is them, then GST is exempted. Or recipient is BPL scarf, but I'm transporting random 5, then also freight is not subject to GST. So first question is taxability. To check the taxability, question number 1, is the recipient other than BPL scarf, or is the recipient person registered only for TDS, or are they transporting random 5? If the answer is yes, GST is exempt. If the answer is no, then I will go to check number 2. If the answer is no, means it is taxable. If the answer is no, means GST is applicable. GST is applicable on freight. Next thing, if GST is applicable on freight, I will do check number 2. What is check number 2? Did the GTA go for FCM? They have an option to go for FCM, no? If GTA has gone for FCM, then who will pay taxes? GTA will pay tax under FCM, either at 5% or at 12%. If they go for 12%, they can take ITC on their purchases, 5% no ITC on their purchases. That's the structure. If GTA did not go for FCM, if the answer is no, then who will pay taxes? Then the recipient. Who's the recipient here? BPL scarf. They will pay tax under RCM at 5%. This is your summary. This is what you should read for the examination. The day before the examination, you should read. But you will not understand unless you understand the whole story. How can you understand the whole thing? Unless you understand from the beginning what is this GTA, how the transaction would work. So everything that comes into your GTA perspective, first you check, is it taxable? Then you check what charge is applicable. Is it clear to all of you? Can I have a quick thumbs up if this is clear? Everyone? Okay. Let's move to the next RCM case. So I've clubbed GTA is very important. In final level, no, they ask questions like 16 marks just from GTA. 16 marks. So you have to have so much of understanding in it. But Inter, they don't do that. But they can occasionally they can ask you a question which can trick you down. to ensure that you understand it in full. Next is legal services. Legal services, no, I will teach you in 3 charts. Very simple 3 charts. That is what I'm going to use for you to learn this. So if you have, see, and chart number 1 is what is generally tested in your exam. That's all. Let's look at the legal services understanding. All your doubts, no, sometimes I'm not able to clarify there. So keep your doubts with you, copy paste somewhere, and then ask me at the end. So I'll be able to clarify specifically to you. Sometimes, when I clarify too much, people will get confused. So I'm just keeping it there. So we will do a Q&A session at the end. Now, legal services, there are 2 RCMs. There are 3 exemptions. I'm going to club all the 5 points into one single chart. There are 2 things that you have to learn in legal services. What is that you have to learn in legal service? Look at the legal structure here. There are 2 areas in GST where they are discussing about legal structure and how GST would be applicable on legal activities. One is in section 7 subsection 2 clause A, which talks about schedule 3 negative list. If you look at negative list, okay, focus here everyone. Please stop talking in Chennai. So you have to focus on the screen. Huh? In schedule 3 para 2, there is a provision which says that services provided by court or tribunal. When I say court, it means district court, high court and supreme court. When I say tribunal, it means your appellate tribunal or any tribunal which has the power of the court. When they provide service, it is not a supply. So Supreme Court, every time somebody is filing a case with Supreme Court will collect something called as a legal fees. Question is this legal fees taxable? The answer is no. Why? Because it's not even considered to be a supply. They've excluded it from supply by negative list. Apart from the court and tribunal, who else is there in legal structure in India? There are advocates. Advocates and chartered accountants are very similar in terms of their practicing structure, and you can have an individual practice or you can practice as a firm. Then some of these individual advocates, when they are practicing for 25 years and plus, the court will designate them as senior advocate. So if you look at the movies like Jai Bhim, you've seen this movie called Jai Bhim. After the case reaches Surya's movie is there, no, Jai Bhim. So after the case reaches to a point, instead of the junior advocate, the senior advocate comes in, right? He's the one who's arguing at some point. And you remember, like, when if you have watched the movie, you will remember this. When the senior advocate comes in, the judge also says hi to him. Like, he's there for like 25, 30 years, and then he's so much of experience. These kind of senior advocate is also somebody who represent in the court. Okay, so all these high profile cases and all, senior advocate would come. So there is an individual advocate. Sometimes this individual advocate would be designated as senior advocate. Then there is firm of advocates. This is how they practice. Then there is another set of professional body which does activities relating to legal services, which is arbitral tribunal. Arbitral tribunal is a place where they do arbitration. What is difference between a court case and arbitration? Arbitration is something that both party decide, sign upon, and the arbitration body cannot put somebody into jail, right? They are there for arbitration. Okay, they are trying to settle up the case. So these kind of bodies are called as arbitral tribunal. Arbitral tribunal is different from appellate tribunal. Appellate tribunal is like court only. They have the power of the court. Arbitral tribunal does not have the power of the court. They do arbitration to settle a case. Say if Amazon is having a problem with Reliance, they will not go to the court and make it as a big issue. They will go to an arbitration. They will discuss. They will settle up. But apart from this court, all these bodies will collect money. Like individual advocate will collect money, senior advocate will collect money for representation, firm will collect money, and arbitral tribunal will collect money. Would it be taxed under, whether the fees paid to the advocate and arbitral tribunals are always taxable? Question number 1. Question number 2, when will it be taxed under FCM? When it will be taxed under RCM? This is what we are going to answer. The answer goes like this. To answer that, you have to refer to this chart. I have a fancy name for this chart. I call this particular chart as Spider-Man chart. That is the name that I call it, because it looks like a spider web. No, like in the middle you have so much of suppliers, and you have different recipients on different legs. It's like a Spider-Man. So whenever I recap in the classes the discussion on advocates, I call it like, okay, let's go to Spider-Man chart, and then we discuss this as Spider-Man chart. So in the middle you can see there are suppliers. Who are the suppliers in here? To understand this, you have suppliers like individual advocate, senior advocate, firm of advocates, arbitral tribunal. Their GST understanding is same for all the services. There is no differences for the services. So if they provide services to 4 different people, how GST will be applicable is our discussion. First, I will give you a fundamental understanding so you understand this much easier. Thought process is very simple. Government do not have plan to collect it from the supplier. So either government will collect it from the recipient or government will give exemption. First, supplier could be advocates or arbitral tribunal. They provide services to a person other than business entity. It's like an individual. An individual went to an advocate, got some services. Can I bring reverse charge on the services provided by advocates to an individual? Can I ask the individual to register and then pay tax under RCM? Not possible. You and I, when we receive a service from an advocate, can I ask us to go take GST number and then pay taxes? Not possible. So what the government has decided to do, gave exemption to it. So we can say an advocate or arbitral tribunal providing services to a person other than business entity. Like example would be an individual. Can an individual also be a business entity? Yes, if they are running a business, they'll be called as a sole proprietor. An individual who's not a business entity, like an individual who is not having GST number, he's not doing any business, would be taxed under forward charge or reverse charge or exempted. It would be exempted. I can't go for RCM because he's not even a business entity. No FCM required, so exemption. Second, if these people are providing services to government, local authority, governmental authority, governmental entity, if I bring RCM, the government will have to pay to GST department. I don't want that. FCM, not interested. So I give exemption. Third one is a small business entity. Now I'm going to coin a word called small business entity for your understanding. What is a small business entity? Small business entity is an entity whose last year turnover is less than threshold limit. Which means in Tamil Nadu, if you are a supplier of goods, you are considered to be small business entity. You are considered to be small business entity if your registration threshold limit, which is if you are a supplier of goods, 40 lakhs. If your last year turnover is less than 40 lakhs, you are considered to be what? Small business entity. You receive services from advocate would be exempted as well. What if I have voluntarily taken registration? My turnover is less than 40 lakhs last year, but I have taken a GST number. Will I be still considered to be a small business entity? Yes. So I have written it here. Even if they are voluntarily registered, I would call them as small business entity. If an advocate or arbitral tribunal provides services to a small business entity, would also be exempted. So we say anybody other than business entity is exempted. If somebody who's a business entity having turnover less than the threshold limit would also be exempted, even if they are registered. Then, what if it's a big business entity? If advocates and an individual advocate, senior advocate, firm of advocates, arbitral tribunal, if they provide services to a big business entity, say Reliance is getting services, it would be taxable. But would be taxable under what charge? Reverse charge. Reliance will have to pay tax under RCM. Are you guys understanding? So we can say when an advocate is providing services, it is either exempted or it is under RCM. When it will be exempted? Person other than business entity, government is exempt. If this business entity receiving is a small business entity, exempt. Only taxable when it is business entity, is a big business entity, and it is taxed under RCM. So never I need to ask for advocate to take registration. It's either no taxes or their customer will pay. Are you able to consolidate this thought in your head? Same thought for advocates and arbitral tribunal. Is it clear? Can I have a quick thumbs up so that I can move to the next chart? Next to 2 more cases. There are 2 more charts you will have to understand. They said there is one more exemption that is there, which is there in chart number 2, which says an individual advocate other than senior advocate. or firm of advocates. Providing services to another individual advocate, firm of advocates would also be exempted. One advocate to another advocate, forward charge advocate, reverse charge advocate, exempted. However, that exemption is not applicable to a senior advocate. What is the service of a senior advocate? They will do representation. They said senior advocate providing services to another advocate will be taxable under RCM by the recipient if they are a big business entity. This is how the understanding would go. So you can look at chart number 3. If you don't have it, I would recommend you to keep a photo of this and then look at it. So you should look at the day before the exam. You look at these 3 charts in terms of advocate and then have an understanding. So a senior advocate providing services to another advocate, and through that to a business entity would pay tax under reverse charge. But all other advocate to advocate would be exempted. I'll give you a quick example to understand this, the context of it. Look at the example here. Mr. Raman is a individual advocate. He's providing services to a business entity called Royal Bakery, and he's charging legal fees of 1 lakh. Question number 1. If the above supply of service taxable. Now think about the Spider-Man chart. This recipient, is he a person other than business entity? No. Is he government? No. Royal Bakery is not government. Is he a small business entity? For that I need to know what is the last year turnover of Royal Bakery. Sometimes what they will give you is that in examination, now I'm giving an exam tip, carefully listen. Sometimes in the exam question they will give you hint like this business entity is incorporated in this year only, which means what is their last year turnover? If the company has started, if this business entity started in this year, what is their last year turnover? It will be 0. Then automatically I know that their last year turnover is less than the threshold limit. Then can I treat that business entity who is incorporated in this year as a small business entity? Yes. So then will that be taxable or exempted, the legal fees? It would be exempted. So here last year turnover of Royal Bakery is 15 lakh. 15 lakh is less than the threshold limit for registration. So this Royal Bakery is considered to be a small business entity. So is the services provided by advocate to a small business entity taxable or exempt? It is exempt. So no GST payable on 1 lakh. I have written the second question. If yes, who is liable to pay? Hey, it is exempt. If it is exempt, there is no question of charge because there is nobody need to pay because it's exempt. I will ask the question of who has to pay, supplier, recipient and all, when it is taxable. When it is taxable. Then I have written third question there, important, no? Would your answer be different if Royal Bakery had taken voluntary registration? Will it be exempt or will it be taxable? I want to answer on the chat box. It will be still exempt. Why? Because we have written here small business entity exemption is applicable even if the small business entity has taken voluntary registration. Even if they have a GST number, if their last year turnover is less than the threshold limit, they will still get the benefit of small business entity exemption. Is it clear, all of you? Is this clear? Is these 3 charts clear to all of you? Can I have a quick thumbs up so that I can go to the next case? All right. Look at the next RCM. Now I'm going to club again RCM with exemption. This is where you have an amendment. So you have an amendment to understand in reverse charge case here. Very difficult to understand. Most of the people don't get this government cases in full. They are all struggling in terms of understanding this. So I have made a logical approach for you to understand. That's how our books have also been written, to get you a easy understanding of government's exemption. So the supplier is government or local authority. They provide taxable services other than the following, that is renting of immobile property and other taxable services like taxable services by Department of Post, Ministry of Railways, service in relation to vessel or aircraft, or transportation of goods or passengers to a business entity located in taxable territories under RCM. 12th case is talking about renting of immobile property. They said government or local authority except Ministry of Railways, if they rent immobile property to registered person is under RCM. Now they made an amendment to that and said any person renting residential dwelling, residential house to any registered person would be taxed under RCM. Then they made one more amendment and said any unregistered person is renting any immobile property other than residential dwelling to a registered person is under RCM. So what we will do is that we will discuss this as two segments. One is government services, second one is the renting. Renting, I'm going to give you a beautiful chart. Anything on renting, just go to that chart, you will all get the answer correct. Like one single chart, you go to that and you will be sorted for the renting part. First, we will attack the government part. Let's look at that. So I've given a logical approach in my chart book itself. Look at this. Okay, so services by government or local authority. This is what is the summary that we are looking into. Okay, so all you have to do is like multiple photos if you don't have this with you. Okay. Again, I've given this in the PDF that I have uploaded on the free resources, which you will be able to see it in tax code. Section 7 subsection 2 clause B says government can notify activities of government or local authority upon recommendation of GST Council as not a supply. So there is a provision which is there in supply chapter, and this provision says that if the government wants government's activity or local authority's activity, what is a local authority? Panchayat or municipality. Their activity, government can say that it is not a supply. There are two activities they have notified as not a supply. One is Panchayat and municipalities function under Article 243G, 243W. Article 243GW in the Constitution talks about a bunch of activity where Panchayat and municipality has the power. Anything that is done by Panchayat and municipality for this power is considered to be not a supply. Then they said one more activities of government is notified as not a supply is giving alcoholic liquor license. We know that alcoholic liquor for human consumption is non-taxable. It's not even considered to be a taxable product. What about liquor licensing? So if you look at Tamil Nadu, Kerala and all that, if any restaurant wanted to start a bar attached to it or wanted to serve alcohol in their cafe or restaurant, they cannot do it without permission. They have to go to the state government, get a license, and state government is going to start charging them for this license. Question is this: whatever license we paid for alcoholic liquor license, would it be considered to be a supply? They said no. So these two activities of governments are not even a supply. Moving ahead, all other activities of government or local authority other than above are considered to be a supply. So anything other than these two activities which is excluded from supply will be treated as a supply of service. To approach it logically, I'm saying that government's activities are broadly can be classified into two categories. One is a welfare services which is provided to public. Another one is commercial services provided to business entity. Again, it's purely logical I'm approaching. You tell me, with your logic, you tell me, when government is providing welfare services to public, should there be GST on top of it or it should be exempted from GST? Should there be GST or no GST should be there? Okay, welfare services are provided. There should be GST on that? No. Normally, when welfare services are provided by government will be charging a very nominal amount. On that itself, there should not be any GST. Commercial services are provided to business entity. Because it's commercial, it should be taxable. This is the approach that they have done. They said, look at it here. They said welfare services provided to public are generally exempt except for some cases where it will be taxable. However, commercial services to business entities are generally taxable except for some exemptions. This is what they have put in. They said when government is providing services to public, normally there should not be any GST. However, 4 cases there are GST for services provided by government itself. These are given here. These 4 services You can see here, these 4 services, even though it is provided by government to public, it is taxable. Let's look at what are these 4 services. Number 1, services by Department of Post. Postal Department is government. However, Postal Department services to public is taxable. Are all services of Postal Department to public is taxable? No. Some services are still exempted. I used to say to the students that these are like useless services which are exempted. I have a code word for that. Services by postal departments are taxed under FCM. Following services by postal departments are exempted. We have a code word called as BIPO. So somewhere you should mark saying that BIPO hyphen, these are exempted services by Department of Post. What are the exempted services by Department of Post? B stands for book post. There's a service called as book post where they wrap all the magazines will be wrapped with something called as book post, and they provide the service. That would be book post is exempt. Inland letter, people used to write letters to each other when, which year, I don't know. That inland service is still there. If you take that inland services for 1 rupee, 2 rupee, no GST. Postcard, writing Christmas wishes and all that, postcard is exempt. O stands for ordinary post less than 10 grams. Whatever you stamp, you affix and then send, no, these are exempted. Apart from BIPO, all other services are taxable, like speed post, parcel post, money order, agency services. Wherever it is taxable, see, postal department is government. Ideally, services of government should be exempted. It's welfare only. However, postal department services are taxable to public. Which are the service taxable other than BIPO? When it is taxable, can I bring RCM? Because you went to postal department and did a speed post, can postal department ask you to pay tax under RCM to the GST department by taking GST number? Not possible. So they said, the services provided by postal department will be taxed under FCM. Second, services of Indian Railway. Services provided by Indian Railways are also taxable even if it is provided to public. Now, are all services of Indian Railway taxable? No. There is an amendment here applicable from May exam onwards. So I have consolidated that for you. All of this should be taken a photo and then kept with you, because these are summaries which are going to be very beneficial for you. I have written it. Because services of services of Indian Railway, Department of Railways, services of Indian Railways are taxable, right? And it will be taxable under FCM because it is taxable to public also. You book an AC ticket, it is taxable. So you cannot pay tax under RCM, so it will be under FCM. That's point number 1. Services by Indian Railway, including renting of immobile properties, taxed under FCM. However, following services of Indian Railways are exempt. Number 1, transportation of passengers other than AC and first class. In Indian Railway, only AC and first class tickets are taxable. Your sleeper, general, sitting, passenger, all of them are exempt. Similarly, an amendment has been added and said that additionally few more exemptions are there, like platform ticket is exempt. Whatever money you pay for waiting room, AC waiting room, non-AC waiting rooms are there. You have to pay 20 rupees, 30 rupees, that is exempt. Cloak room, you keep your luggage, you have to pay a small ticket for that, that is exempt. Battery operated car, if you go to Chennai Central Station, from one station to another station, or one platform to another platform, from one platform, one coach position to another, you have this small golf cart kind of a car that you can keep your luggage and then you can travel with. Some 100 rupees, 150 they charge. That would also be exempt. In transportation also, in Indian Railway, if you transport random 5, I already taught you what is random 5. That is also exempted. Apart from this, anything else, which means if you book an AC ticket in Indian Railway, that is taxable even though it is provided to public. Okay, that is taxable even though it is provided to public. Then, service in relation to the third service that you can see here, which is taxable to public, is service in relation to vessel or aircraft. Services provided in relation to vessel or aircraft is also taxable. Say you needed to get a license on the vessel, you need to get a license for a private jet. All of these are also going to be taxable. Transportation of goods and passengers, say Tamil Nadu State Road Transport Corporation, TNSTC, They have a AC Volvo bus. If you book AC Volvo bus in TNSTC, that will be subject to GST. TNSTC is government, right? But it is still taxable because transportation of goods and passengers are also taxable even if it is provided to public. So your understanding is this for services provided to public is taxable, therefore it is under FCM. These four services provided to, look at this wordings that I have written here, look at these wordings, even if these services are provided to business entity, it will be still taxable under FCM, which means apart from these four services which are taxable under FCM to business entity, all other services provided to business entity would be taxable under RCM. That is your understanding. So we can say like this for services to business entity FCM, all other services to business entity RCM. Are you guys understanding this? Are you guys understanding the structure? Okay. It is logical also, right? When what services will be provided by government to business entities? Say Reliance Jio want a 5G license. Telecom Regulatory Authority of India is giving 5G spectrum license to Reliance. Right? 5,000 crore is collected by Telecom Regulatory Authority. Why should Telecom Regulatory Authority collect GST from Reliance and then pay to GST department? I will ask Reliance, hey, you only pay directly to respective government department. Anyway, you're dealing with one more government department, deal with other government department also. This is the thought process. But Indian Railway is providing services of booking booking train ticket. Indian Railway ticket is booked by a business entity. Indian Railway only will collect tax under FCM and then pay to the GST department. That is under FCM. So these four services are under FCM. Speed post service is availed by TCS to send couriers to different department. Now TCS wants to send courier to all their staff. So to do the speed post services, they went to postal department, did speed post. Who will pay taxes? Postal department under FCM. Are you guys understanding? So because that is Department of Post Services, they are taxed under FCM even if it is provided to business entities. You're understanding. Now we need to understand renting of immobile property. I will let you take a quick photo. This is a must-have photo. Any question on renting, you keep this photo with you. Any question, okay? You take any question from any of your books, any of the author's book, just go to this chart, you will get correct answer. So what I've done, I have clubbed exemption together with RCM and then given you a full chart. So renting of immobile property, if you get a question, so somebody can rent what kind of property, you have to first go through this order only. Look at, is the property a commercial property or a residential property? If the property is a commercial property, which is a commercial space given on rent to business entities, right? If it's a commercial property, the next word you should remember is it is always taxable. Because if it's a residential property, a hotel is a commercial property or residential property? Commercial property. Yeah? A flat or a house is what property? A residential property. A mall, a techno park, cyber park. Okay, so the location that you have, the Bata showroom that you're sitting in, all of these would be what? What property? Commercial property. It is given on rent to somebody by someone. Okay. So residential property, commercial property, you separate it. Let's first look at commercial property. Government wants taxes. So then the next question is, who should pay taxes? That's the only question we are answering, because the moment you get the question, it is commercial property, we know that somebody has to pay taxes. Then we have to ask, who is the supplier? The supplier could be first category of supplier. Who's the first category of supplier? Government, but other than Indian Railway. Local authority, Panchayat, municipality. Parliament. So Parliament will rent their space. Yes, inside Parliament there is canteen. There are small, supermarkets inside, grocery shops. So Parliament also would rent spaces. State Legislative Assembly, similarly, there will be canteen space that is rented out. Some grocery shops. Court or tribunal chambers are being rented out. Okay. So if they are renting commercial spaces, then we have to ask the question, is the recipient registered? If the recipient is registered, it will be under RCM. If the recipient is unregistered, it will be under FCM. Government has given a property to a registered person. Government will only collect value of the rent, tax is paid under RCM. If the government is renting to an unregistered person, government will have to collect GST and then pay the GST under FCM. That's the thought process. Then, what if the owner is not government? It is a private party, including your Indian Railway. Then I have to ask the question, is the supplier registered? If the commercial property is owned by a person who is having a GST number, say the property that you are in a shopping mall, Phoenix shopping mall, they will have a GST number. Yes, they have given multiple rooms inside the mall on rent. Who will pay tax? To any recipient, registered or unregistered, it will be under FCM. Normally, supplier only will pay. When that will be under RCM? Suppose I have a very small commercial property, a small, independent building, small building. I'm collecting only 1 lakh rupees rent for the entire building. 1 lakh. My annual turnover is how much from the rent? 1 lakh into 12, which is 12 lakh. What is the limit at which I should register? 20 lakh only. I'm a service provider. So I am renting commercial property, but I don't have a GST number because my turnover is less than the limit. Then I will become an unregistered person. This is the amendment that we have. I'm an unregistered person giving what property on rent? Commercial property. Then I have to ask the question, is the recipient registered? Okay, so the academy who has a GST number has taken this 1 lakh worth building on rent. Then they will have to pay tax under RCM. This is the new amendment that we have. Okay, what is amendment? An unregistered person giving commercial property to a registered person would be taxed under RCM. So in commercial property, what is the only case where GST will not be applicable? Look at the note I have written here. Look at the note. Renting of commercial property by unregistered supplier to an unregistered recipient. I have a commercial property, small. I don't have GST number. I gave to somebody who also does not have GST number. Then tax will not be applicable. Otherwise, all other cases, GST will be applicable on commercial property renting. Is that clear to you? However, if it's a residential property, what if the property is a residential property? Then I have to ask the question, supplier can be anybody. Okay, residential property means flat, house. Okay, supplier can be anybody. Supplier can be registered or unregistered, doesn't matter. You might have 10 flats also, doesn't matter. You will never pay taxes. Supplier will never pay taxes on the residential property. You have to ask the question, is the one who has taken the property on rent registered or unregistered? If the recipient happened to be unregistered, like you and I, who has taken the building for our family to stay on rent, no GST on that. GST is exempt. You can look at here. But if the recipient is registered person, an academy has taken this guest house on rent for its faculty to stay. Now the recipient is registered. Who will pay taxes? The recipient will pay tax under reverse charge mechanism. It will be taxable under RCM. Clarificatory circular is also there. Renting of residential property to a registered person being a sole proprietor for personal purpose is still exempt. What is the meaning of it? I'll give you a quick example to understand that. Look at this. Say there is a house. Raju is the owner. Raju has given the house to Mr. Gopal. He does not have GST number. So how do you answer this kind of question with our chart? First, we will ask, is it a residential property or commercial property? What property is it? Residential property. So you should be able to close your eyes, get the chart in your head. That is where you win. Okay, that's where your clarity is superb. So you should be able to visualize the chart and then the chart should appear into your head. Then you're sorted, you learned it. So on the right side, you have residential property. Okay. Then you ask the question, supplier can be any person. So Raju or someone, doesn't matter. Recipient, unregistered, then exempt. Second, they have given this property to Federal Bank, which has registered for their managers to stay. Then I have to think, okay, recipient is registered, Federal Bank. Who will pay taxes? Federal Bank will pay tax under reverse charge. Third, it is taken on rent by Mr. Rahim. Rahim has a GST number. But Rahim has taken this house on rent for his family to stay. Sole proprietor has taken this residential property for his personal purpose. But so the sole proprietor has a GST number. It will be still exempt. Why? This rent will not be included in his expenses for the businesses. It is not a business expense. So sole proprietor will be paying tax under RCM only if he takes it for his business residential property, not for his family to stay. Are you guys understanding the structure? Is it clear? Is it clear, everyone? Can I have a quick thumbs up if this is clear to all of you? The long discussion, that case is very important for you to understand. All right, perfect. All right, so we have concluded our government discussion also, but I wanted to do a couple of connected questions, but I'm already hitting my target of the day. So what we can do is that we can resume this discussion in tomorrow's session. So after you go through renting of immobile property, now in this session we are going to go through rest of charge. So you can look at 13th and 14th cases. Both of them can be connected and then learned together. Two more additional cases. Earlier these two cases were together. Then they split these cases into two separate reverse charge. So you can see I have given in the same order of supplier. Who should be the supplier? What kind of activity? What is a service? And who's the recipient who has to pay tax under reverse charge. They said music composer, photographer or artist or the like, when they provide temporary transfer or permitting the use or enjoyment of copyright relating to original dramatic, musical or artistic work to a music company, producer or the like located in taxable territory will be taxed under reverse charge mechanism. What is the meaning of this? They're saying, so think about music composers, how music composers would make the revenue. Just think about it, you will get the understanding of overall what it means. So if you look at all the music that we see, it is hosted in the YouTube channel of not the music composer. Okay, it is hosted in the music channels of the music producer, right? So if you look at say T series for that matter, T series has all their music that is hosted in T series music YouTube page. So all the YouTube revenue would actually go to T series, right? So we have to ask the question, what is the revenue that is made by music composer? Music composer will sign an agreement with the music producer, which we generally call as a royalty contract. So whatever money that is made by the music producer, a portion of it will be transferred to the music composer. So music composer and music producer is having a contract. Who's providing the supply of service? Music composer is providing supply of service to music producer. Now one music producer like T series will be working with, or Sun Music will be working with huge number of composers. So government said they are going to collect taxes from the producer, not the music composer. The same with a film artist. There will be one producer and so many film artists getting money. So the tax needs to be paid under reverse charge by the by the film producer. Okay, so artist is not the one who has to pay taxes. The producer will have to pay under reverse charge. They said this industry is unorganized, so the only way I can collect taxes would be to get it from the producer. Okay, so that's under reverse charge. Earlier, author doing the same activity. Author is also doing the same activity. What is that activity? Temporary transfer or permitting the use or enjoyment of intellectual property rights. What intellectual property rights author would be giving? It is copyright of his literature content, right? Say I'm an author, I write a book and I will ask a publisher to publish it for me. So the contract is generally called as publishing contract. So an author like Chetan Bhagat is a famous author in India. Chetan Bhagat is writing a book, and Chetan Bhagat has asked Rupa publishers, HarperCollins publishers or some publisher in India to publish it for 2 years. Whatever books are being sold by this publisher, the publisher is going to collect money on the sale of the books. Okay, so that is supply of goods. So we are buying the books from bookstore or buying from online store. The publisher is selling the books. That is supply of goods. Now, what is the money that is collected by the author? The author is actually getting money from the publisher. Say there is a 200 rupees book that we are buying. Out of that, maybe 25%, that is 50 rupees, will be paid by the publisher back to the author. An author is not providing supply of goods to the publisher. Author is actually doing supply of service to the publisher. What is this supply of service called as? It is called as transfer of their copyright of the content for 2 years. Will be subject to GST? Yes. Who has to pay taxes? The publisher will have to pay taxes under reverse charge. Now, there is a slight change of provision that you have there. Very similar to GTA. You can see here later part of it. It's not a recent amendment and all. It was been there for few years now. They have given an option. Author can choose to pay tax under FCM. Now, author has an option to go for FCM. Now, if they go for FCM, they will charge to the publisher with the GST. This, so you have to remember that in what are the cases that option is available? Option is available in two cases. One is GTA. The second case that we have seen is author. What is this option? They can go for FCM. They can choose to pay tax under FCM. If they go for FCM, they will collect the taxes from the customer and pay it in normal method. They will give bill, they will add a GST and then collect. But if they don't go for it, it will be the publisher who will have to pay tax under reverse charge. Now, if at all the author is going for this option, they have to give a declaration in prescribed form. And they should not withdraw the option within 1 year from the date of exercising the option. So after going for this option, for 1 year, you have to be under option. Why would somebody go for FCM? If they go for FCM, on their inward supply, they will get input tax credit, like GTA that we have seen. So to get the input tax credit only, they're saying that we will go for an FCM option. If they go for FCM, they can take ITC on their purchases, right? So in that cases, they should not take it on the benefit of them. For a month where they have so much of purchases, they will go for FCM. Next month where they don't have enough purchases, they go for RCM. That option is not allowed. Once they go for FCM, they will be in FCM for 1 year. This is the provision that we have. So just to get understanding of this a little further, I'm putting you through an example question. It's an RTP question. Mr. Vicky Franklin, an unregistered famous author, received 3 crore of consideration from Shiv Bhavan publication located in Indore for supply of service by way of temporary transfer or of a copyright covered under 13(1)(a) of Copyright Act 1957 relating to original literary work of his new book. He finished his work and made available the book to the publisher, but has not yet raised the invoice. Mr. Vicky Franklin is of the view that SBP is liable to pay the tax under reverse charge on services provided by him. But SBP does not concur with his view and is not ready to deposit the tax under any circumstances. Examine whether the view of Mr. Vicky Franklin is correct. Further, if the view of Mr. Vicky Franklin is correct, what is the recourse available with Vicky Franklin to comply with the requirement of GST law as SBP has completely refused to deposit the taxes? Now, Vicky Franklin is an author. He is doing a book and then given the copyright of the book to Shiv Bhavan publication. Now, Shiv Bhavan publication is saying that we will not deposit taxes under reverse charge. But in this particular case, SBP, the Vicky Franklin is saying what? Vicky Franklin is of the view that SBP is liable to pay tax under reverse charge. So, first question in here is asking, is the view of Vicky Franklin correct or incorrect? Correct or incorrect? You tell me the answer. It is correct. Yes, because we have learned that author to publisher, publisher has to pay tax under RCM. But the question says that publisher is anyway not going to deposit. Is there any option in which the author can comply with the GST provision? Yes. What is the option? Author can opt for forward charge and charge GST. So now they are only billing 3 crore. What they should do? They should bill to the publisher 3 crore plus GST, and author has to take registration. Why? Because they are an unregistered person. They have to go and obtain registration and start billing the publisher 3 crore plus GST, collect GST and pay to the government. This option is there. If they go for this, they have to give a declaration. They should not withdraw this option within 1 year from the date of exercising the option. This is what is the provision says. Is it clear? Can I have one quick thumbs up so that we can move to the next case? Yeah. Look at this. Now with this RBI case, I am going to teach you how to solve a question including ITC on net GST computation. I will take one question also for you to solve. So be carefully, try to understand here. For me, it's very easy to revise RBI cases to you. So you have to start from exemption, not from RCM. You should read from the exemption here. Now, earlier, there used to be an exemption for services provided by RBI. But what happened now? This exemption is, I have crossed it. So this exemption is withdrawn. What is the scenario now? Services provided by RBI is now taxable. Services provided to RBI was always taxable. So we can put a summary here. Services provided by and to RBI are fully taxable. There is one services provided to RBI that will be taxable under reverse charge. Who is that supplier? Overseeing committee member of RBI. When they provide services to RBI, it is RBI who will pay tax under reverse charge. Who's an overseeing committee member? For your understanding, it will be like an independent director. Government has appointed some finance professionals to oversee the functions of RBI. So these people are called as overseeing committee member who will attend the meetings of RBI, give RBI suggestions. They will be getting a sitting fees. Is this sitting fees taxable? Yes, because overseeing committee members are not employees of RBI. They will not be receiving salary. They will be receiving a fee, 194J income tax TDS. Therefore, it is taxable. Who has to pay the taxes is the next question. Who has to pay the taxes? It is RBI who will pay tax under reverse charge. To get your understanding perfect, I will take one question and then solve it for you. Okay, you can look at the question on the screen. If you guys want to have a copy of this question, I suggest you take a photo and then keep it with you. Okay, so but we are going to resolve this particular question together. Okay, let me read the question for you. RBI Maharashtra registration provides you the following information. You're requested to compute net GST payable. So we are computing net GST payable by cash for April 2023. I have given the information. There is RBI audit fee collected from Punjab National Bank 5 lakh, charges for payment operation from various banks 10 lakh, license fee from NBFC 2 lakh, salary paid to Governor of RBI 5 lakh, IT services availed is 10 lakh. Sitting fees paid to Mr. Bhatta, an overseeing committee member, is 1 lakh. Assume GST rate is 18%. All the amounts are excluding GST, not ITC, excluding GST. All conditions for ITC satisfied. All are intra-state supply. So we don't need to bother about CGST, SGST, IGST. Always CGST, SGST is what we will take. Okay. So this is a net GST computation question. So we have already looked into in one of our previous sessions, how do you compute taxable value of supply? This is another category of question wherein they'll test you on net GST computation. So to compute net GST, we have to, when you get a question, the extended version of this question only generally comes in the examination as compulsory question even. So when you get a question like this, we should first identify out of this question for whom am I computing the GST. I'm computing GST for RBI, right? So for RBI, I'm computing net GST by cash. So in that case, I should know what is my outward tax liability, what is my input tax credit. So I need to separate, okay, I need to slowly scribble and then separate what are the things in this question is outward supply, what are the cases in this question is an inward supply. RBI audit fee collected from Punjab National Bank. Is it an outward supply for RBI or inward supply? It is an outward supply because they have collected fee from Punjab National Bank. Charges for payment operation from various banks. Again, they have collected money from various banks for NEFT, RTGS kind of transaction. That's also an outward supply. License fee collected from NBFC. So RBI is providing outward supply, collecting money. Salary paid to the governor. Salary is not a supply. IT services availed is an inward supply. Sitting fees paid to Mr. Bhatta, an overseeing committee member, is also an inward supply. But overseeing committee member providing services to RBI is taxed under reverse charge. So with this information, how do I go ahead and then solve my computation? So let me take you through the computation mechanism. So what we do is, we'll go ahead and then take any computation question, okay? Let me do it for you together. So you have taken the photo, means you will have to solve this together with me, okay? So to ensure that you have the format correct, so all of you take your notes and start writing with me. So any computation question, what should I do? I should have a heading. What should be the heading here for this computation question? I'm computing what? So that should be the heading. So I will write computation of net GST payable, computation of net GST payable by RBI Maharashtra registration for April 2023. This is the heading. This is the computation I'm doing. Not all RCM cases are at 5%, okay? So I'm just answering a question that I have from Matangi on the chat box. RCM cases, should we take 5% or should I take the rate that is given? Always take the rate that is given. 5% is not a common rate for RCM. There are cases where you have 18%. There are some cases where they have kept it at 5%. Wherever it is 5%, given in the question, we take it. Rate is not something that you need to assume. Rate is always given in the question. Hope that answers. Now, to compute net GST, I would divide my computation into three parts. So my column structure, so every time you get a question, you should be careful about your column structure. My column structure should be that I should have a column for particulars. I should have a column for value. Then I will have columns for GST. I always look at the question. If the question has only intrastate supply, how many GST columns I require? 2. If I have only interstate supply, how many GST column I require? 1. If I have intra and inter, I would require 3 GST columns: CGST, SGST, IGST. Only inter, IGST alone. Intra, CGST, SGST. In this question, I have given that everything is intrastate, so I will only have CGST, SGST columns. I would divide my net GST computation into three segments. What is net GST? Net GST is nothing but, in a formula if you put it, net GST is nothing but outward tax liability minus input tax credit. What is net GST? Outward tax liability minus input tax credit. So here, how will I compute my net GST? I will first compute outward tax liability, then compute input tax credit total, then you do the set off. And whenever you do the set off, if the question has IGST, you have to follow manner of utilization of credit, which we will look at when we reach there. So I would separate a net GST computation into three segments. My part A would be computation of outward tax liability. In that, I will list all my outward supply. In my question, what are my outward supply? I have, what are my outward supply? I have RBI audit fee from Punjab National Bank, which is 5 lakh. Charges for payment operation from various banks, 10 lakhs. A license fee from NBFC, 2 lakh. Are they all taxable? Yes, services provided by RBI are now fully taxable. Audit fee 5 lakh, payment operation 10 lakh, license fee 2 lakh. So, RBI audit to Punjab National Bank. Value was 5 lakh. Second, payment operation. Value is 10 lakh. Then license fee in BFC 2 lakh. My question says everything is at 18%. Since it is intrastate supply, I will have CGST, SGST at 9%, 9% each. So 9% of 5 lakh is, I want you to take calculator and then type and then compute. 45,000, 45,000. 10 lakh means 9% would be 90,000, 90,000. 2 lakh means 18,000, 18,000. So then I would write a total of outward tax liability. Can you tell me the total? Always follow the comma discipline. So this is the first part of the question. If there is a step mark for you to solve a question, you would get 1 mark for this particular step. This would be computation of outward tax liability treated as a step in the valuation. But I am computing net GST, so I need a part B also. Part B is computation of ITC eligible. To compute what is ITC eligible, I should first look at in the question, do I have any opening credit available? So I'm going back to the question and checking if there is any opening credit available. No. Then I have to look at what are the payments that I've made wherein I have taken an inward supply. Now, if you look at this particular question, you have salary that is paid to RBI governor. This salary paid to RBI governor is not even a supply, so I would not have paid GST, I can't take ITC. But we have to write this and then write a working note. Salary paid, I'll put a dash for everything and then write it in bracket, is not a supply. Under section 72A, read with para 1, schedule 3. Even if you write schedule 3 alone, your answer is still fine. I'm writing the full section and I'm telling you that even if you write section 7 alone here and schedule 3 alone here, still it will be considered to be a good answer. But if you're able to write the full para, it is great. Second, what is other inward supply where I would have paid GST on, RBI would have paid GST on IT services availed, which is 10 lakh. How much is CGST? How much is SGST? CGST would be 90,000. SGST would also be 90,000. service from overseeing committee member. Value is 1 lakh. Now you have to be very careful in this understanding. Let's go back to the question and then see it once again. See, there is a 1 lakh rupees that is paid by RBI to overseeing committee member. Whether they will pay GST also to overseeing committee member? No. Why? When an overseeing committee member provides services to RBI, RBI will have to pay tax under reverse charge in cash to the government. But after paying that, can RBI take the credit of it? Yes. So what is our assumption when you have a question like this? We assume that we paid this by cash and we have taken the credit. So can I include this 1 lakh also into my credit? Yes, because I'm assuming that I have paid and I have taken the input tax credit of it. Are you guys understanding? So always remember, when you have an inward supply under RCM, if it is not an ineligible credit, if it's not like a blocked credit or anything, I would actually take the credit and I should keep it in my mind that I'll take the credit, and after that I have to show them that I paid it by cash, right? So ICAI represent this in multiple ways, but I feel like this is a better representation. What ICAI does is that ICAI generally goes and then shows this as a part of your outward tax liability. After outward tax liability, they will mention an additional amount here, tax liability paid by cash. They will show something like this here, right? RCM liability by cash, they will show right after outward tax liability, and then again take the credit here. Then after the credit, you will add back and then show that this is also paid by cash. It's a complicated one. So what we should do when you have an RCM in your question, if it is eligible, take it as credit. How much they would have paid under RCM? 18%, 9,000, 9,000. I have shown it as credit, and that's it for my credit. So I would do a total of ITC, which is 99,000. Part C, net GST payable. How will you represent this net GST payable? That's the question, right? A net GST payable will have to be computed in the manner of utilization of credit. What is manner of utilization of credit? It says like this. If you have IGST credit also in the question, you should always look at the manner of utilization of credit. Then you should utilize your IGST credit first. IGST should be first utilized against IGST. Then it should be utilized against CGST or SGST in any order. But in our questions, we should utilize to ensure that we get the minimum liability. Then IGST is fully over. I will go to CGST credit, set off against CGST. Then go to SGST credit, set off against SGST. So CGST, I will set off. Even after that, if I have extra CGST, I can set off against IGST. Then SGST, IGST. This is the method in which I should do the set off. So this is the manner of utilization of credit that you have it under section 49. Please understand, we will use this only if you have an IGST credit. In a question, you only have CGST, SGST credit, or you only have IGST credit, then you don't need to do any of this. What you can do, you can directly go and set off. So you will show net GST payable A minus B, which is 1,53,000 minus 99,000 gives you 54,000 as your answer. But if they ask you this question, is it the only credit that is payable? Then you should know that. So this is the only amount that is payable by cash. The answer is no, because you've already paid this 9,000 by cash and you have taken the credit. So we will show, to show representatively, to help you with presentation. After this, you should show that tax payable under RCM by cash, which is 9,000, 9,000. So total GST payable by cash for April 23 will be 63,000, 63,000. This will be the answer. Now we have to write two working notes here. I'll show you how to write working note also to ensure that I'm giving you a full understanding of it. So if you look at working note number 1, we should say that overseeing committee member to RBI is taxed under reverse charge. How do you write this answer then? You should write it with section number. You remember yesterday I taught you a section wherein I taught you how to write even notification number inside it. Do you remember I told you to even write it and then paste it somewhere so that you can learn it in full? See, keep that in your mind. Okay, then how, tell me how you should go ahead and then solve that particular question. So if you're somebody who is looking into this in full, I would decide RCM. I would decide RCM notification based on whether it's intra-state supply or interstate supply. This is intra-state supply. Which notification number I should take? I should take notification 13/2017. Which section I should refer together with it? It is 9 subsection 3. So it will be like this. I should write like this. As per notification 13/2017, read with section 9 subsection 3 of the GST Act 2017, service by overseeing committee member to RBI is taxable under reverse charge. Working note number 2, common working note. For every RCM question, you can write this working note. Tax payable under RCM cannot be paid by utilizing ITC. It needs to be paid by cash. Once paid, it can also be availed as ITC. So this is how you will solve a question. Is it clear? Can I have a quick yes on the chat box and a thumbs up from the Chennai batch? All right. Can I move to the next case? Can I team, can I have a quick thumbs up if it's fine for you? You've copied all of it? Okay. If you're not really quick in copying, you should look at photographs. Right. That's a thought. Look at the next case of RCM. I am clubbing RCM together with supply and other discussion in this particular RCM case. Look at the next RCM case. It says lender of a security providing service of lending of security to borrower of security would be taxed under reverse charge. Now, we have multiple places where securities are being discussed in GST. So I've consolidated and put a summary chart for you to look at. This is something that you might want to take a photo and then keep if you don't have it already with you. See, there are three activities that can be tested in your exam with respect to securities. What are the three activities that you have? One is disposal of securities. Second, facilitating transaction in securities. Third, lending of securities. What is disposal of security? Disposal of security is buy and sale of security. What is a security? Securities could be shares, debentures, bonds, etc. If you look at the definition of goods, goods definition in GST goes like this. Goods are every kind of movable property. It includes actionable claims. It includes growing crops which are severable before the supply, but it excludes two things. What are the two things that are excluded from the definition of goods? Number one, goods does not include money. Number two, goods does not include securities. So two things are not considered to be goods. However, GST can be applicable for both goods as well as services. So to decide whether GST will be applicable on money and securities, we have to go and then read securities. We have to go and then read the definition of service and see whether securities and money are included in service. And the service definition, the weirdest definition of service we ever had in GST goes like this. Service is anything other than goods, money and securities. So we can conclude by saying that securities and money are excluded from both goods and services. However, service exclusion of security and money are not complete. What is that they have said? Some activity relating to money and some activity relating to securities are included back to the definition of service. Two activities are mentioned there. Activity number one, in terms of money, if you look at, they said use of money, exchange of currencies or denominations, it will be treated as a service when there is a separate consideration, which means that you go to a bank or an authorized dealer, you give your Indian rupee and ask for a dollar. This is exchange of currency. It's a transaction in money. But what is that the exchange dealer will collect extra from you? A commission or an exchange fee. So the moment they charge an extra commission or extra consideration for exchange of money, it will be treated as a service. That consideration, that commission will be subject to GST. Similarly, if you look at securities, they said a stockbroker, when you go and buy, sell securities, you go to stock market, buy and sell stocks, will not be treated as a supply. However, if you do a transaction in securities, you need to have a demat account and a trading account opened. The trading account is opened with a stockbroker. The stockbroker will collect for every transaction that you do. They will collect something called as a brokerage. They said the brokerage will be treated as a supply of service. So that is called facilitating transaction in securities. So that is the first two branches that you have it on the screen. I said disposal of securities are neither goods nor service, like sale and purchase of shares. It's not a supply, no GST. Facilitating transaction in securities are considered as supply of service. Example, stockbroker collecting brokerage. GST is applicable. Then who will pay GST? The stockbroker will pay GST, which means that it will be taxed under forward charge mechanism. Stockbroker will collect the GST from the person who is doing the trading and pay under FCM. Now there is one more transaction which is considered to be a service in security, which is lending of security. A high net worth individual, I have 10,000 shares, I can actually lend the security for a fee for somebody to create a financial transaction and get an additional revenue for me. So if you are a high net worth individual who has 10,000 lakhs of shares, you can lend the securities. This is also treated as a service in GST. That's the third activity that you can see here. Lending of securities considered as a supply of service. Example, an HNI, high net worth individual, is lending stock for a charge. GST is applicable. However, GST is paid by borrower under reverse charge is what is given under RCM. Are you guys understanding this? So three activity. One is not a supply. Second is a supply under FCM. Third is a supply under RCM. These are the three activity that you have to remember. So I'm having 10,000 Reliance shares. I lend the shares to ICICI Bank. Now ICICI Bank will pay me 1 lakh rupees as lending fees. But GST is paid by ICICI Bank under reverse charge mechanism. I had discussed this point somewhere else as well, but let's quickly recap this point. Any person other than body corporate is doing security services. What is security service mentioned here? Supply of security personnel to a registered person located in taxable territory is taxed under RCM. However, RCM will not be applicable in two cases. I have already discussed this together with the composition levy scheme. I told you, when the recipient happened to be government, local authority, governmental agency registered only for paying TDS under section 51, it will not be under RCM, it will be under FCM. Similarly, if the recipient is registered but opted for composition levy scheme, also would be under FCM. Then this is tested once in the examination. Renting of motor vehicle, we can understand this in a structured summary. I'm going to give you a detailed summary, a little complicated for a revision, but I want to give you that so that you understand it in full. Okay, so try to have best of your focus and try to remember everything that you have learned in GST. So they said this is a conditional RCM case. It's very so much of conditions are attached to it. They said supplier should not be a body corporate. Who is a supplier category? Any person other than a body corporate who is supplying services to a body corporate, which means recipient should be a body corporate. Then they should not invoice charging 6%. So here also we can say that they have an option to go for FCM. So what is the third case? We have made a summary here, no? Option to go for FCM. Now there is a third person that we have added here, which is renting of motor vehicle. Here also you have an option to go for FCM. So 3 cases you have an option for FCM. So they said they should not opt for FCM. Then services by way of renting of motor vehicle designed to carry passengers, which means what vehicle only will come here? Passenger vehicle only. Which means if I'm renting a truck, will it be coming under this reverse charge? No, only passenger vehicle, where cost of fuel is also part of the consideration. A car is being given on rent, a bus is being given on rent, all of them would come under this because it is only a passenger vehicle renting. So they said the body corporate will end up paying taxes. But similar to the renting of immobile property, for this also we should understand it through a chart. So if you have my chart book, you should refer to charts under this page number 49. If you don't have this book with you, then I will show you a chart that you can take a photo of. You might want to click this summary and then keep it with you. Say renting of motor vehicle where cost of fuel is included in the consideration charged. It is designed to carry passengers. There are 2 options available with you. Okay, option number 1, you are under 12% GST or you are under 5% GST. So we can think like this. You are somebody who's renting the motor vehicle designed to carry passenger. Cost of fuel is also included in the consideration charged, right? Then you have option number 1, which is you can go for 12% GST rate. What is the benefit if you go for 12% GST rate? Full ITC will be available on your inward supply. So you have 2 tax rate available. One, you can go for 12%. If you don't go for it, it will be under 5%. But both of them I'm discussing about FCM, okay? If you're under 12%, automatically you have to charge. Why are you under 12%? You want to take ITC. If you want to take ITC, you should be under what charge? You should be under FCM only. So if you are under 12%, you can take full ITC on your purchases. Supplier can be any person, recipient can be any person, but it will be taxed under FCM. Say I am somebody who is renting I have 5 Swift car, I rent it to Federal Bank, 5 Swift car. For pickup and drop of their employees, I am using this 5 Swift car, I have given it on rent. Then my renting would be taxed, I am charging 12%. So I am charging 1 lakh rupees plus 12%, 1,12,000 from Federal Bank. I will have to pay tax under FCM. I can take all the ITC of my inward supply. Then I did not go for 12%, which means that I could be under 5%. Unlike 5% being under RCM always, it is like GTA cases wherein they said 5% can be under RCM or FCM. 5% will be under RCM only if following conditions are satisfied. What are the conditions? Supplier should not be a body corporate, recipient should be a body corporate. So you can look at the chart and then understand here. Option number 2 is 5% rate. What is the problem with 5% rate? There is a restricted ITC that you have on your inward supply. Then I have to ask the question, is the supplier a body corporate or other than body corporate? What is a body corporate? It is a company or an LLP. If the supplier is a body corporate, then it will not be under RCM. To become under RCM, the supplier has to be other than body corporate. So if he is under 5% and the supplier is a body corporate, then it will be FCM 5%. So if I'm a company who's renting this motor vehicle to Federal Bank for 1 lakh, I would charge, if I'm under 5%, I would charge 1 lakh plus 5,000. 1 lakh plus 5%, 5,000 from Federal Bank itself, FCM, because I'm a body corporate. I did not go for 12%. Okay. So, but I won't get any ITC. It's a restricted ITC scenario. In the second case, where I said supplier is other than body corporate, I'm an individual who has an agency wherein I'm renting it to them, but I did not go for 12%. So I'm other than a body corporate. Then I have to look at, is the recipient a body corporate? If the recipient is also not a body corporate, I am an individual renting Swift car to another individual. Means what? Will it be taxed under RCM? No, it will be FCM, again 5%. If the recipient is a body corporate, Federal Bank, I am an individual, I did not go for 12%, then Federal Bank would pay under RCM 5%. This is the understanding that we have. So this is what you should keep it in your mind. Now what I'm going to do extra to this is club this with an exemption. Look at the screen and then I would club this with an exemption understanding. So renting of transport vehicle has some exemption that is mentioned in notification 12/2017. I told you that GST has to be clubbed with other understanding also. Likewise, when you read renting in your charge chapter, you should go to renting in your exemption chapter and club it, which is very difficult to do. So I have done it for you, so you can just simply look at it and try to have understanding. Say, if you are renting vehicle, if it's transport vehicle, in first 3 cases there is an exemption. If it is goods vehicle, there is a 4th case, there is an exemption. Look at it, it's a conditional exemption. First exemption is, if you are giving motor vehicle more than 12 passenger to a state transport undertaking. Who is a state transport undertaking? Your Tamil Nadu TNSTC, Kerala KSRTC, Andhra Pradesh State Road Transport Corporation APSRTC. All of these are considered, Karnataka KSRTC, all of these are considered to be state transport undertaking. You are giving a bus to a state transport undertaking would be exempted on rent. So motor vehicle more than 12 passengers only will be exempted. Then if you're giving to a local authority or electrically operated vehicle more than 12 passenger to a local authority is exempted. Kochi Corporation or Chennai Municipal Corporation, you're giving a bus would be exempted only if it's an electric bus. Then third case, vehicle given to someone who is transporting student, staff, faculty to preschool till higher secondary. If I am having a bus and I am doing pickup and drop of students of Don Bosco school, whatever money Don Bosco school has given to me would be exempted, because there's an entry in exemption which says that transportation of student, staff, faculty, we call that as SSF. So if you do transportation of SSF to preschool, that is your kindergarten still 12th standard, higher secondary would be exempted if you do transportation services to school. Similarly, if you are renting vehicle to somebody who's doing this transportation service also would be exempted. Then fourth one, if you are giving goods transport vehicle to a goods transportation agency is also exempted. You're giving a truck to a GTA would also be exempt. With that, look at an example here. Example number 1. ABC Rental Private Limited has provided 5 Swift car to TNSTC for 1,50,000 rent per month. Would it be taxable or exempt? It would be taxable. Why? To an TNSTC, you should give a vehicle which is more than 12-seater. You're giving Swift car which is a 5-seater would be taxable. Question number 2. XYZ Rental Private Limited has given has given 45-seater diesel bus to KSRTC for 1,50,000 per month. Would it be taxable or exempt? Would be exempted because it is 45-seater and it's more than 12-seater and it is given to KSRTC, State Road Transport Undertaking, would be exempted. Third, ABC Rental Private Limited has provided 42-seater automatic petrol bus on hire to Kochi Corporation for 1,20,000 per month. Would it be taxable or exempt? It would be taxable. Why it is taxable? It is a petrol bus to a Kochi Corporation, that local authority. You should give an electric bus to get the exemption. Number 4, XYZ Rental Private Limited has given Tata Punch EV car to Chennai Corporation for a monthly rental of 50,000. Would be again taxable. Why? Because it is an electric vehicle but only 5-seater. It should be electric vehicle more than 12-seater. ABC Rental Private Limited has provided 42-seater AC bus to Agarwal GTA for rent for 2 lakh for transport of their employees. Again taxable because to a GTA you should give a goods transport vehicle, not a car or a bus. It is goods, it's passenger transport vehicle, no exemption. XYZ Limited has given 30-seater EV to Bangalore Corporation for 30,000 per week rental. It is exempt because it's more than 12-seater. It's an EV. It is given to local authority. Look at the 7th question. Mr. Raju is providing transportation of students from and to their houses to Don Bosco for Don Bosco Public School for 2 lakh. Whether 2 lakh would be exempted? Yes, because it is provided to a school. Transportation of students would be exempt. Mr. Gopal has given a tempo traveler to Raju for the same for rental of 50,000. Whatever that rental that is given to them also would be exempt? Yes. Activity number 1, transportation of SSF to preschool till higher secondary is exempt. Activity number 2, renting of motor vehicle to the above people would also be exempt. Are you guys understanding this? These many exemptions you can actually figure out from this. So always club multiple areas into one common so that your learning would be much better. Is it clear, everyone? Okay, so in case you guys want to have a look at the look at this here, I would give you this again. You can look at, if you want to take a photo and all that, just do this and then go ahead. So that concludes our discussion on all our reverse charge cases. So you can be happy that we have covered all the 20 cases of reverse charge for us. Okay, so let's have a clap for ourselves, and then we will now move to our my favorite chapter, which is input tax credit, and I have a lot of amendments to cover there. It's a little fragmented amendments, but I will cover all of that. So you have to have a quick discussion. If you are having your ICAI material or my material, my chart book, whatever that you have bought, you can open that and then go to ITC chapter. Before I start the ITC chapter, I'm going to have a discussion.